This is one of the most underappreciated sectors in the entire stock market right now. Does everybody see the earnings of this company? Guess what all this crazy spending means in the end? One of the best things that can happen for the economy over the next few years is big companies spending fortunes. When companies are spending big money, it means great things for the economy actually over the next few years. If you understand how fast a hype cycle can go and how insane it can be, Nvidia came out with banger. This is the start of a multi-month hype cycle. We're talking in a couple months, it can sell off 30, 40, 50%. When it gets hot, dude, you can see that stock make a 50 to 100% move like that. It's clearly because Tesla robots are going to replace all the plumbers and electricians in the next year, of course. You're comparing newspapers to some of the greatest CEOs and companies we've ever seen in history. This might be the most poorly run company in the whole stock market. I'm not kidding. Holy smokers, the flapjacks are back to being flipped, ladies and gentlemen. Back to back to back. Really good days. The public count up another $25,000 here today in the public account. So we have a lot of stocks making some massive moves. Massive moves. Honest was up over 20% today. Revolve up almost 8%. Celsius was up about 7%. ServiceNow was up big. Shopify, my Tesla hedge was up. CRM was negative, very much negative in after hours trading yesterday, and ended up being up like 5% here today. So we got a lot of stocks to talk about in this video, what some opportunities are, what stocks are poised to continue to move huge, and all those sorts of things, okay? After the bell, Little Dingo came out with earnings, Duolingo, so we'll speak about that, kind of my opinions, perspectives there. Then I want to get into this video. This is very important. The big dog, Nvidia CEO Jensen, talking about software stocks, okay? This is one of the most underappreciated sectors in the entire stock market right now. And I think that it should have a lot of people's attention right now. And I mean a lot of people's attention, okay? AI's impact on software stock prices seem overdone. Ed Yardenny, I'm looking forward to reacting to that one. And then how to gauge the bottom in software stocks. We'll talk about bottoms in general in regards to stock market and all that good stuff, okay? Appreciate y'all for joining me as always. One thing only I need from you before we get rolling. If you could just hit that little like button, I'd appreciate that little thumbs up button. That's all I need from you guys. I appreciate you for doing that. And also, thank you everybody subscribed here to the channel. We are now at, I don't know how many subscribers. I haven't been keeping track on this channel recently. I know we're at an all-time high subscribers, but it's a big number. I'll take a look at it later, and I appreciate each and every one of you for being here. Also, if you have access to 1000xstocks.com, just so you're aware, I did post this. I said, not sure if you guys have seen the new and improved conference calls feature on 1000xstocks.com. We now even have live conference calls on 1000x. I said I spent a lot of money on to make all this happen. Thank you also to Trevor, being the project leader on this. A lot more cool stuff coming for 1000x over the next 3 to 6 months. I'm spending a lot of money on 1000x this year. I'm trying to make that by far and away the best tool for long-term investors out there when it comes to advanced softwares, and just trying to be a one-stop shop for everything. So yeah, exciting times. If you want access to 1000xstocks.com, access to my private group, private Discord chat, exclusive weekly videos, all that good stuff, that will be the pinned comment down there. You can click on that, fill the form, see if you're a good fit to join us in there, okay? Alrighty, ladies and gentlemen, so let's talk some stocks. Do we want to? Let's go. Honest stock. This move came to kind of shock a lot of people because the stock was down about 7% after hours yesterday, and then it ended up being up 20+% here today, right? And people are like, well, you know, what about the revenue, right? We all knew about that. Everybody knew about that. Everybody and their grandma knew about that, right? We know the business, they're doing a restructuring right now. They're getting out of some bad businesses that they were in that were low margin, that were old businesses before Carla got there, the current CEO, right? When the company was on, you know, the path for bankruptcy. She's totally turned this business around, and it's incredible. Like the margins and where those are going to trend now, they're going to put themselves in a position where they can likely grow the company sustainably year in and year out, right? It's a miracle, just to be quite frank. But the biggest thing, I think, was the buyback. Now, this buyback they announced, $25 million, way more impactful than a usual company announcing a buyback. And here's why. Let's say you're Nvidia and you do your buyback, right? If you're Nvidia and you do a buyback, you know how many shares of Nvidia are traded per day? Back and forth. It's an insane amount, right? Say you're Tesla. You're like, oh, we're going to go do a share buyback, right? Oh my gosh, people are trading Tesla stock like insane every single day. Honest is not a heavily traded stock. I was looking prior to this video, and I'm like, how many shares of Honest even trade in a given day? And it looks like in a total trading day, that less than 2 million honest shares trade a day. Now it's a $2 stock, roughly, right? Do the math on that. It's not very much. So if Honest comes in and wants to scoop up 100,000 shares a day or something like that, or 200,000 shares a day for the buyback, that's a big buyer in the market, as in the biggest buyer in the market, right? For a stock of this size. So that's why this buyback, I think, is massive for the stock price of Honest moving forward, right? And so it's actually pretty genius, and it's dramatically more impactful than a normal stock. Like, let's say Apple does a buyback, big deal. You know how many people are trading Apple stock every day? How many funds are trading it in and out, in and out? Dude, Honest stock's hardly so thinly traded that when they do a buyback, that's a massive buyer in the market, man. And that could be a continued buyer day after day, week after week, month after month. And the great news is, if they want to do another 20, let's say they exhaust this 25 million, let's say they buy back a lot of shares over the next 3 to 6 months and they exhaust all 25 million. They have so much cash on the balance sheet and the sort of money this business should be generating in the future, like they could easily then do another $25 million share buyback. So Honest is set to continue to see momentum overall. That doesn't mean Honest is going to go up every single day or something like that, but that stock should continue to see momentum. RVLV, ladies and gentlemen, let me say this, okay? When it comes to Revolve stock, RVLV, oh my gosh. If you look at the financials of this company, they are incredible. I spoke about RVLV in the video last night on the main channel. I don't know if you guys watch the main channel, Financial Education. I'm sure a lot of you guys do. Appreciate y'all for watching me over there as well. But I spoke about that stock and I'm like, does everybody see the earnings of this company? Did everybody see what they were talking about for the sales numbers in the first 7 weeks? Does everybody realize like this is one of the go-tos for Gen Z females? Like, oh my gosh, and think about like how much money that generation is going to, get over the next 10, 20 years. And if that brand resonates with that generation, oh my gosh, like this is huge. So RVLV, pretty exciting opportunity there. Celsius, they came out with earnings. If I recall, I gave them, I can even look here. I believe I gave them a B- grade for Celsius. Yeah, B- grade for Celsius here. This was their earnings that came out, if I recall, it was this morning. So $721 million from 332. Gross profit went to 341 mil from 166 mil. Selling general administrative expenses, 235 versus 185 in the same quarter last year. That's to be expected with a business growing like this. No, they had this one-off kind of big distribution termination fee here that was like $80 million. Right? So that kind of like hurt the GAAP numbers in the quarter, right? But still, income from operations went to $26 million in the positive versus $18 million in the negative in this quarter last year. That's with that $80 million like one-off here. Like that's incredible, right? Now, as far as total other operating expenses, that was about $3.4 million there. Interest expense definitely climbed because of the acquisition and all that, right? So that's kind of hurting them. But at the end of the day, net income came in at $24 million versus negative $18 million in the same quarter last year. And then if you take out the dividends on preferred stock, $9.1 million positive net income versus negative 25 million in the same quarter last year. Diluted EPS 4 cents versus 11 cents. It's a B- grade overall. They're going to have a lot of room to expand margins and profitability, back half of this year and then into 27 and 28. So right now, the big focus is really revenue and gross profit, right? So solid numbers. Like I said, they got a lot of work to do on terms of their bottom line, but man, like the sky's the limit for Celsius. So very, very exciting times overall for that stock. Very underrated stock in the market, in my opinion. Very underrated. ServiceNow saw some momentum today. We're going to talk about software stocks here in a moment. The Salesforce flip was huge. That was huge, folks. Huge, but we'll see. We'll see what happens with these sorts of stocks moving forward. People may get excited, then they may sell them off again. Like it's just a whole situation in regards to that. Duolingo, little dingo. So they came out and, as expected, reported an A+ grade income statement. Great numbers. Like that's the thing with Duolingo. Like this is a tricky one for investors because the numbers are incredible from this company. It's like A plus. I think the last quarter I graded them an A plus. This quarter, it's like almost every quarter is an A plus when it comes to income statement. But keep in mind, there's a lot of things that go into a successful stock and that are outside of just an income statement, right? But when it comes to revenues, 282 mil versus 209 mil. Gross profit, 205 mil versus 150 mil. Right? Total operating expenses went to 162 from 136. That's not bad. So income from operations exploded to $43 million from $13 million in the same quarter last year. As far as interest income, that went to 11.5 mil from 10.6 mil. Income before income tax is $54 million versus $22 million. And then net income, 41 million versus 13.9 million. Great numbers from Duolingo overall. But the stock's down 20+% after hours. So you say, why? How is a company like Duolingo that comes in with these great reports, how does the stock just go down, down, and down? I think that stock is now down 80+% from the highs it was at last year, ladies and gentlemen. Last year. Here's why. If you look at the amount of new members they have, or new customers, whatever you want to call them, new users, it's slowing substantially. It's like they were, if we go back a year ago, 6 months ago, they were attracting an insane amount of, new people using the app and things like that. That has slowed monumentally, like the charts, so they are still growing new users, but it is at a very slow clip compared to where they were at 6 months ago, 12 months ago, 18 months ago. And so that puts the stock into a scary situation where people are afraid that if you go forward, let's say 2 quarters from now, 3 quarters from now, 4 quarters from now, the company's user base is actually going to start to shrink, not expand. And there's a strong argument to be made there, just to be fair. The numbers just keep getting worse and worse and worse when it comes to how many new users are attracting. If they can't turn this around, and the thing that's an issue for the company is if you look at sales and marketing, that was actually an area they jumped immensely in terms of the amount of spend. Sales and marketing went from 24 mil to 34 mil. So they're spending almost $10 million more on sales and marketing, yet having more trouble attracting a lot of new users compared to what they used to be able to do. And so that's the fear around Duolingo. I wish I held my Duolingo put options. Those babies would now be worth $340,000, ladies and gentlemen. I sold those for $50-something thousand and made a very quick profit. But gosh, if I just held $340,000 they'd be worth now. What an incredible amount of money. Oh well, cost of doing business, right? Okay, let's talk some software stocks.
Software industry, the SaaSgeddon that they've been calling it. You look at law firms, cybersecurity firms last week, and then IBM shares this week had their biggest drop in a quarter century. Is that overdone by the markets, or do you think there's a real good reason that investors are looking at this and saying, this is going to change everything for these industries that have been so entrenched?
Deeply, I think there's a deep misunderstanding. What Claude is definitely revolutionary, and it's an inflection point for AI. It's the first time that AI can perceive, it can reason, but it can also do work. It actually performs tasks. Like, for example, it can, write software. It could create a website for you. It could arrange a vacation for you. And so it can actually perform tasks. And that's the reason why we call them agents. They're agentic in their nature. What software companies, the reason why it's so exciting, of course, is because it can write software. What's going to happen are the tools companies, the platform, the ISVs, the SaaS companies, the tools companies, they will use agentic systems to develop their software. But enterprises are not going to go develop software. They're going to use agents to use those tools. And so what's likely going to happen is that agents won't replace the tools, but agents will use tools. That's the reason why we also say agents are tool users. Why write rewrite the browser when the browser exists and just use it? Why rewrite Excel when Excel exists, just use it? And so all of these tools that we use today, whether it's Cadence or Synopsys or ServiceNow or SAP, these tools exist for a fundamentally good reason. And AIs, these agentic AIs, will be intelligent software that uses these tools on our behalf and help us be more productive. And so what's likely to happen, and this is very counterintuitive.
Wait, before he goes further here, because he's rattling off a lot of things, let me say this. Very important to say this. That man you're looking at right there, he is one of the biggest reasons why there's so much fear and anxiety around software, around everybody's job's going to be eliminated, blah, blah, blah. Because he has hyped and made everybody so excited over the last few years talking about his chips and how special they are and how it's going to change the whole world and, you know, all this stuff. He's honestly the biggest reason in the world. To be very crystal clear, he's the biggest reason in the world by a mile that there's such worry about this, because he's convinced everybody so much that they have to spend just an unbelievable amount of money getting his chips. He's convinced everybody it's gonna, like, this is game changing, and, you know, we're right around the corner of, like, general artificial intelligence, and, like, you know, it's gonna eliminate everybody, you know, buddy's jobs and all these sorts of things, right? And so everybody's running all these conclusions like, oh, software, we don't need it anymore. Oh, you know, no one's gonna have jobs anymore. It's gonna be no such thing as white collar jobs. Like, he's the biggest culprit of this whole game. So it's very entertaining. Like, he's now having to talk it down, actually, right? And trying to explain, like, no, this isn't going to just, like, eliminate everything, which he's 100% accurate on. It's not going to eliminate everything. Like, you need the data. The software companies have the data, right? And then those companies are using agents as a product that they sell, right? In many various ways and in many different products that they sell across the board. And so then customers can use those companies' products in there, and then the LLM companies can then make money off of the SaaS companies. So SaaS companies are kind of like the middleman in regards to this situation, which are necessary. So, anyways, it's just funny hearing Jensen having to now explain why, like, software companies are, like, very vital and, like, needed.
Very likely that because we have so many agents in our company now, the tool use will actually go up. And so, and you could see it all over the place. The number of C compilers that we use, the number of Python programs that we have, the number of instances are growing very, very fast because the number of agents we have that use these tools are going up. And so I have 42,000 biological employees, and I'm going to have hundreds of thousands of digital employees, and together we're going to use a lot more tools.
But that means that you think that they're not going to disintermediate these companies like a Salesforce or so many of the others along the way. You think they'll still be using those tools coming from those companies that are being sold off right now by the markets?
I think so. I think the market's got it wrong. I think it's very likely that these companies that we're talking about are going to introduce agents that run on their platforms.
They already have
these
them.
Agents, of course.
They haven't been introduced. They already have them. Like, Salesforce is selling these products now. They're making money off this now. Not like, oh, they're going to make money off this 3 years from now, 5 years from now. No, today. Can you imagine the amount of money they're going to be making 2 years from now from this, 4 years from now, 6 years from now, right? ServiceNow, all these companies, like, it's not like they're just like woke up and they're like, crap, let's try to figure out how to create something here. No, they already got it rolling.
They have to be experts in what they do, and nobody's going to understand customer service better than ServiceNow, and they're going to come up with agents that are really fine-tuned and optimized for the type of work that uses the tools that they have. In the end, also, we need the tools to finish their work and put the information back in a way that we can understand. And that we call them system of records. And so each one of these tools have their own system of records. Those system of records exist because we put them there and we use it so that we understand the information that's finally complete. And so those system of records will still be ground truth, and they'll continue to be ground truth. And now the agents will help. They will use it, and they will populate the system of records. They will use the tools that are available on these platforms. I think a thought experiment that could be helpful is, imagine one of these days when we have robots and these robots are in our homes. It's very unlikely that the robot will come up with a new Cuisinart. The robot will just read the manual for the Cuisinart and just use the Cuisinart. It's more likely that instead of coming up with another way of doing microwaving, that the robot will just use the microwave. These tools exist for a good reason. And so...
Listen, Phenomenal point you just brought up there. Phenomenal point. Why go through all the hassle? Let's say you got a Tesla bot in your home in 10 years from now. Okay, we got a Tesla bot here. Yeah, why would the Tesla bot be like, you know what? I'm going to make a whole new oven. Why? Why would that make sense? I need to get all these different parts and put it together and then try to make sure it doesn't like overheat and like then I got to test it. Like, no, it's just going to learn how to use an oven, the one you have in your house. And so the same thing with this. You think it's going to want to build a whole new Salesforce and then do that again for every single person and do it like, come on, man, like it's just ridiculous. But I think that's actually a great example Jensen gives there, so people can kind of like understand, like, okay, I get it.
I'm fairly certain the future robots will use screwdrivers and wrenches and pliers and things like that. And these tools are essentially in their digital form from the companies that you're talking about.
So they're not going to replace the tools. They're just going to replace us, the humans that use all these tools to begin with. That's an interesting thought experiment. I like it.
Help us.
They're going to help us. Okay, we'll take that.
They're going to help us. Yeah, they're going to help us. And the reason for that is because, as it turns out, that for most of our software engineers, coding is what they do, just as for a CEO, typing is what I do. But the purpose of the typing, the purpose of the coding is solving problems and solving problems that we haven't even thought of solving. That's called innovation. And so the purpose of the work won't change. And so we're going to need lots and lots of software engineers. But maybe they just don't have to code like they used to code. They'll code in a new way. They'll code in they'll describe to the agents what their intentions are, what kind of ideas they have, and the agents will write the actual software. And so, we'll work at a different level of abstraction. We'll be a lot more productive, hopefully, create a lot of new things and solve a lot of new problems.
Yeah, I mean, whenever you're in it's very important everybody understands this. Listen, whenever you're at a new technology of some kind, there's a lot of excitement, a lot of hype around it, right? And then people start getting scared of it. It doesn't matter what it is. Like you go all the way back to when the farmers started having machines to help them, right? There starts to be fear around what? Around all the jobs are going to be eliminated. We got some new tool here, and so this thing is now going to eliminate the need for humans, right? You could have went back to the tech revolution, and you could have said, oh my gosh, like people are starting to order stuff online. They're just going to order everything online. That means Sally, who usually rings up my groceries, I'm not going to need her anymore, right? So she's going to lose her job. And all those people at the store that usually stock the shelves, oh my gosh, I'm not going to need them anymore. First off, it's 2026 and we still got like all these stores that are still stocking shelves, and you can still go to a Walmart and you can still go to a Target and you can still go to the grocery store, and you're still going to be able to 5 years from now and 10 years from now. Maybe someday physical stores don't exist anymore, but gosh, it takes so long. Okay. Second, you have to consider all the new jobs that come out of a new technology. People just think it's like a zero-sum game and there's no new jobs. No, there's so many new jobs that end up being created from this new platform, this new thing. And so think about it in terms of Amazon. You think like, oh, they're going to eliminate all the jobs. Well, did the people account for all the people that then have to be at the warehouse to then stock those shelves and then pull things, right? And then, fulfill the orders and then go have those orders delivered, et cetera, et cetera. Like, oh my gosh. And now look at Amazon, like they're one of the biggest employers in the world. And you would have thought, like at the beginning of the tech revolution, like, oh my gosh, this is going to eliminate like all these jobs, and really it ended up creating so many jobs. And then you think about all the indirect businesses that maybe they couldn't get on the store shelves of Walmart back in the day because there was only so much shelf space, but now they can actually have a business and sell on Amazon, right? If you made the fourth most popular spatula, you probably weren't getting into Walmart back in the day, because Walmart doesn't need 4 different spatulas. They need probably 2 or 3, right? If you're a seller on Amazon, you could be the 15th most popular spatula and still be doing good business, right? So the amount of jobs that end up being created from new technologies, everybody always looks at it. There's always like this wave of like, oh, this is bad, this is scary, this is this and that, right? But they always miss how many new jobs are created from that. I give a great example of like the internet and like me starting my entrepreneurial journey in regards to my real estate marketing company. And I started doing photography. I started doing like drone videos and drone photos for homes. And this is when that was like super new technology. And everybody thought it was so cool. Like, oh my gosh, you're using a drone to film this luxury property and stuff. It was crazy back in the day when I was doing that, right? That wouldn't have been possible 30 or 40 years ago. So when I did that 10 something years ago, like that was like, oh my gosh, this is amazing. And YouTube and all, like, gosh, man, there's just so many things that, end up coming out of these new technologies and so many jobs. But there's always a phase you go through where people only look at it from like the potential downside and this is only going to be bad. We're all going to be eliminated.
Denny Research with me once again at Post 9. Are you thinking a lot about that as you look at this tech trade, wondering like what's actually happening here?
If this new tech, right, if you can use Salesforce and it can go through your client list, right? And be able to tell you, you need to reach out to this customer, that customer, you need to do this. I'll do that for you. I'm actually going to call this customer and reach out to them, right? And this prospect and those sorts of things. You might be able to make, who knows, tens of thousands extra dollars a year, hundreds of thousands, millions, tens of millions, depends on what size business you are, from something that you wouldn't be able to get to in the past. And with that extra money, well, you could just take it out of the business and go spend it, which means more jobs, right? Or you can hire more employees to do even more things. You can spend more money with the software companies, which means they have even more money to spend. Like, there's a lot that comes with this, and I don't think people account for that. So very important. I think everybody should be doing some study on these software stocks. That's all I'm gonna say about that. Specifically, Salesforce and ServiceNow.
December 7th, we decided to rebalance our recommendation. We actually recommended underweighting the Magnificent Seven. We thought that there was just going to be too much competition as a result of all the money they were spending on data centers. And we also went overweight going global instead of staying home. So those things have worked out pretty well. I think they have a ways to go. I think it's very healthy for a continuation of the bull market. It's not a lot of fun for those who are still overweight the Magnificent Seven.
I know there are questions, though, as to whether that rest of the market trade is a little long in the tooth.
Right.
And, I mean, if it is, and then you have weakness out of tech, you're gonna have a market problem.
Yeah, the get out of Dodge trade, get out of the Magnificent Seven, has basically been around since late October, when Michael Berry kind of raised some relevant questions about the profitability of these companies. The rebalancing overseas has been going on since the beginning of last year. In the grand scheme of stock market history, that's really fairly new kind of developments.
What does it tell you? I mean, you've seen so many markets, Ed. And you've written about so many periods of time, too.
Yep.
What does it tell you when you see a market that is so quickly driven and swayed by a obscure research report or, a projection about something that might happen? Does that tell you anything, make you feel a certain way about the market you're watching?
Yeah, I mean, it clearly, with the benefit of hindsight, indicates that the euphoria on AI wasn't sustainable, and it turned into AI fatigue, and now it's AI fear. It's almost kind of AI derangement syndrome. I mean, people have kind of gone off the deep end about how this is going to create major job losses and all sorts of other dire predictions. I think these are all extreme.
Oh, and listen, fear sells very well. You can write this fan fiction about, AI eliminates all these jobs, which eliminates all this, and then eliminates. Dude, I could write you a fan fiction as well on, this country launches a nuke at this country, and they launch one back, and boom, 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 and we're all dead. Asteroid comes, poof, they're dead. Like, we can do that all day. It's easy peasy, lemon squeezy. And if people aren't well informed, I guess they can get very, very scared of that, right? I mean, imagine a person that doesn't understand asteroids or understand much about history, and I'm like, I think I see a big asteroid coming. I'm like, have you heard about these things called asteroids? It smashed into the Earth. We're done. I think I see one out there. Oh my gosh. And that's what the stock market is. It's like, a lot of people are not very well informed in the stock market, and so you give them some fear, and then you give them some more fear, and give them some more fear, and eventually they get very, very scared. And eventually what happens after that is they start not getting scared at all. And that's when they've been had too much fear put in their face too often, and then eventually it starts to fade off. A good example of that was actually 2022. By the end of 2022, you couldn't really throw anything at the market anymore to scare it because it already had dealt with so much. The Fed raising rates, inflation out of control, Russia, Ukraine, blah, blah, blah. And so after it went through so much, it was kind of like you couldn't do anything to really get the market down anymore, and the market just started to go higher, higher, higher.
I think AI is a great tool. I think we're all going to be using the tool to make ourselves more productive. I see this as net a positive, but the market right now is going through all sorts of mental gymnastics.
Well, I mean, look, obviously software is the epicenter. Yeah. The biggest, declines in that space, I think the financial crisis is like 30 something years.
Yeah.
Is that overdone?
Yeah. I think it is overdone to a certain extent, but in this case, you got to be a stock picker. I don't know that you buy an ETF of software stocks because some are not going to make it, and others are going to make.
Oh, look at all these young flapjack flippers back here.
Very, very, very well. So, given that there's a lot that we don't know how this all plays out, why not go with the flow and go into energy, materials, consumer staples? Those have all done well, and of course the overseas trade. I mean, you've talked about what's going on in Korea and and other markets.
But energy is a small piece of the market. It's tiny.
It's not hard to overweight.
Staples have done really well.
Yeah.
Maybe they're too expensive.
Yeah.
I mean, those aren't areas of the market that are going to make you feel like, oh, okay, I'm going to lean in there, and I think the S&P can have a really great year.
I think financials is certainly a place that's been beaten down of late because of the AI fears. But as Jamie Dimon, CEO of JP Morgan, explained, that he expects that they will spend $20 billion in 1 year on technology, specifically AI, and that net it's going to be a big productivity booster. And I think a lot of financials are going to be like that. The regional financials, I think you're going to see benefit from AI, but also benefit from M&A.
And guess what all this crazy spending means in the end? Lots of jobs. Listen, you want to spend all this money on tech, you want to spend all this money on infrastructure and all these buildings and all these data centers being built and all this and all that. It's not free. And it doesn't just magically happen. Last time I checked, we don't just have Tesla bots going all over the place building all this stuff. It has to be done by humans. All this trucking, all this transportation of all these different chips around and racks and blah, blah, blah. Massive amounts of jobs. One of the best things that can happen for the economy over the next few years is big companies spending fortunes. If you just hoard the money and let's say do share buyback, you're not doing much for the economy. It's just facts. There's not an opinion. That's just facts. Like, how is that good for the economy? It's no different than, let's say I make $5 million a year from stocks, okay? And I never go out there and spend. I never go to the restaurants here in Vegas. I never take any flights. I never travel anywhere, right? I just hoard my money. I never buy a new car. I never buy a new house. I just sit in my house and just hoard my money. I could do that, but does that do anything good for the economy? Of course not. Now, if I'm going to the restaurants, I'm going to do this, I'm going to travel over here, now everybody's getting to make money off me, right? So the same thing happens with companies. When companies are spending big money, it means great things for the economy, actually, over the next few years. They don't spend money, that's where you get in trouble. That's when you get a slowdown. You need people spending. You need companies spending. That's a very, very good thing for the economy.
Can we talk about software, which is trying to make a bit of a turn today? Some, looking at the price action in some of those names and saying, well, maybe we're trying to put a bottom in. If you look at Salesforce was down, let's look at Salesforce because that stock last I looked had turned positive. And it still is up. The guide wasn't great from a revenue standpoint. They announced the $50 billion buyback, though, sort of Benioff, stand up and saying, all right, this is getting a little absurd. And he was animated when he was on with Jim Cramer last night, talking about how the markets punish these names unfairly in his mind. Listen.
We are projecting $46.2 billion in revenue. Jim, the first time I was on your show, I think it was $1 billion in revenue. We're talking $46.2 billion. It's just the 46 times since 2008 when I was first. 2009, I think I was first on the
2008.
show. Amazing.
Well,
and Jim.
Yes.
Jim, that, of course, was one of our first SaaS-pocalypses. You know, remember that? You said I had to come on the show because it was a SaaS-pocalypse. And then, you know, we lived through the 2020 SaaS-pocalypse when you're like, oh, how are you going to survive through the pandemic? And here we are, Jim. We're in another SaaS-pocalypse. It's a series of SaaS-pocalypses.
All right, that's Mark Benioff with Kramer. Maybe this time is different than some of the others. Not sure. Dan Ives says solid quarter. He lowers his target, though, to 325 from 375 to reflect the lower multiple. You have at least 5 target cuts today. The lowest I saw was to 194. Reiterated underperform at Bernstein. Rob, you own this name.
And this name, I own some other names, and I think we're likely to be longer at some point, but we're not ready to call a bottom. The reaction today demonstrates how oversold these names have become and how extended the positioning between semi and software have become. And most companies have been absolutely guilty until proven innocent in this space. And there's valid questions on terminal growth rates. There's no question about it, but I think we're in a place.
So there's a few ways you can be greedy in the stock market. One way is you take out a bunch of debt, margin, things like that to invest more money. It's a way you can be greedy. Not a good decision. Second way you can be greedy is, let's say there's a stock that's way overvalued and you say, I'm still not going to sell this stock because, you know, even though it's very, very overvalued, you know, I think it might go up another 10% because it has so much momentum, right? That's another way you can be greedy. Another way you can be greedy is if you see great companies, truly great companies, huge revenues, huge profits, growing very nicely, proven great management teams, trading at very cheap valuations, and you love their long-term futures, and they're at an extremely attractive price, and you say, I'm not going to buy because they might go down some. It's a huge way of being greedy, and it's a huge mistake. That's how you end up missing it, right? Because let's say there's Metastock. Metastock falls, was back in 2022, goes to $125, right? You could have played the game of like, I'm not going to buy yet because it might go down some more, right? So you're waiting and it keeps going down, and it ends up going all the way down to 88. You're like, yeah, I think it might go down a little bit more. And there was a lot of people when I was buying Meta under $100 heavily and around $100 that were like, oh, it's going to 50, it's going to 35, it's going to 20, you know, just throwing out crazy prices, right? So you can play that game of like, it might go even lower, so I won't buy yet. Dude, losing game. Like, you got to buy the whole way down. If it's a great company and you believe in that company for the next 5, 10, 7, 3 years, you got to buy the whole way down. The whole way. And the further it goes down, the heavier you come in with those buys. Don't get greedy and think you're going to be able to time out the perfect price. It can't be done, okay? I do have Meta shares that I bought at $88.94. Not because I'm a genius and I knew exactly who was going to buy them. No, because I also have shares I bought at like 93. I also have shares I bought at 100-something, low 100-something, mid 100-something, above 100-something. Probably have some shares in the 200 range. That's fine. Like, you know, you're not going to get the bottom. That's just a bottom line with that. So if you've got stocks trading extremely cheap, you have to be buying those stocks. As simple as that.
Service businesses, Scott, are ultimately possible beneficiaries of the things that are happening here. Maybe it's not. They want you to believe that. Well, and we do. We've seen these dark periods before, and they become essential adoptions into many of the way businesses operate, and they can develop AI agents that ultimately are useful to their technologies and their service into businesses.
I think a memo went out this week or over the weekend, and I think in the memo, this is like metaphorical, not actually. Nobody wrote this in print, but I think a conversation behind the scenes was had It's enough already, Dario. No more podcasts. The guy from Microsoft, nobody wants to hear from you anymore either. It's enough of this kind of talk. And now we want supportive talk from the AI layer of tech, or you're going to have some very angry customers, all of which are in the software business.
But how are you so you don't even, your actions speak louder than words. They don't have to say anything. They continue to roll out new products and innovations that are...
Disagree.
Look at Perplexity and what they've done in the last 24 hours.
Let me finish the thought. I think you'll agree with what I'm about to say. Here's what we've seen since this hypothetical conversation happened behind the scenes. We saw in my industry, LPL announced a massive thing with Kevin Nolan, who runs the wealth management vertical at Anthropic. This was not about, look how many financial advisors we're going to replace. It's, hey, here's LPL, almost as big as Morgan Stanley in terms of advisor headcount. We're doing a collaborative deal where Anthropic is going to power the human, I don't know what they call them in Silicon Valley these days, meat computers, who actually are serving clients on the front line. And that was not a disruptive announcement from Anthropic. It was a collaborative one. Then you hear Jensen Huang come out and say, if you have a robot in your kitchen, are you trying to invent a new Cuisinart? Or does the robot learn to use that Cuisinart? The Cuisinart is a great stand-in for Salesforce, for ServiceNow, for Workday, for all of these tools. It's more likely the agents are going to learn to use the SaaS company's products rather than how quickly can we destroy them and build new ones.
That's probably why when Jensen Huang was asked about what's been happening in software, when he was on Squawk Box, he said the following.
I think the market's got it wrong. I think it's very likely that these companies that we're talking about are going to introduce agents that run on their platforms. You know, these agents, of course, they have to be experts in what they do, and nobody's going to understand customer service better than ServiceNow, and they're going to come up with agents that are really fine-tuned and optimized for the type of work that uses...
By the way, if you're wondering, why did he say ServiceNow specific? Him and ServiceNow CEO Bill McDermott, those guys are very, very close. They've done many interviews together over time. They're like best friends. You know, I don't know, actually best friends, but they're like, you know, definitely pretty close relationship there. Let's just call it that.
Tools that they have.
Okay, so there's Jensen defending in some ways the software business. Snowflake also reported their revenue guide was good. The stock's not reacting very well either, Steph. What's happening here? You have at least 7 target cuts. Top pick at B of A.
Whoa. Hold your horses. Snowflake's still messy. I'm not talking soccer, ladies and gentlemen. Look at this. Where is it? Here it is. Look at Snowy. D-. So, revenue looks great. Gross profit looks great. After that, only other good thing you got is G&A. Outside of that, man, it's a mess. Look at the operating loss, $318 million. You say, well, it's a lot better than this quarter last year, $386. Sure, that's true. But it's still ugh. It's still ugh. Loss before income taxes, $301 million compared to $330 million the same quarter last year. Ugh. It's still awful. So, like, they've got at least 2 to 3 more years before they start to maybe get this to break even, hopefully. Like, it's still an ugly situation. Like, best case scenario is maybe a year out. Best case scenario, they can get it to break even. But I don't even know if that's going to happen. It's probably looking more toward 2 or 3 years from now, and maybe they get to break even. And then maybe in the 2030s, then you can start to really focus on profitability around Snowy. But gosh, man, that's a long time to wait. And especially if you ever think like maybe a business model like that might be disrupted or something. So, you know, I don't like to put Snowflake in the same category as ServiceNow, as a Salesforce, as these insanely profitable beast software companies. Very different business model. Very
target to 195 at Bernstein. Their market perform. So what's with this one?
Well, last year it really had a very nice year, and the year before that it had a really bad year. It's a pretty volatile stock, but I think that the numbers are very supportive of the stock going higher over time. Product revenue growth of 30%. Who do we know that's actually growing product revenue at 30%? RPOs are running up 42%. Huge. Deferred revenues, 31%. their net retention is 125%. I mean, their customers love their products. They've got more products coming out. The guidance was fine. I think a little conservative, but we're learning that this management team actually is a lot more conservative than previous management. I think margins eventually can get to 15, operating margins can eventually get to 15%. I mean, they just did 9%. So I think that there's a lot of operating leverage in this one, and I think it's just it's getting caught up with the rest of software. I think that's the opportunity, though. These guys have a consistent way of growing 25 to 30% in product revenue growth, and I think that's going to continue for quite some time.
So you bought more Synopsys. It's the one that you were alluding to earlier when you said you trimmed Amazon, and then you bought more of something, and this is the something.
This is the something. It was an outstanding quarter, and this was a very conservative guide, and that's the reason why the stock is down 5%. But this thing is down 35% from its highs. Earnings grew 24%, revenues up 66%. Design automation grew 96%. This is mission critical stuff that is sold, software that's sold to the semiconductor companies, the sophisticated semiconductor companies. The more sophisticated AI gets, the more they need Synopsys and Cadence, by the way, and it trades at a 6 multiple point discount to Cadence. And they just made a huge acquisition with Ansys, and I think that it's going to grow, enable the company to grow its total addressable market from $31 billion today to $58 billion by 2028. So I just don't see why this stock is down as much as it is, especially today after a good number, but a conservative guide is conservative guide.
So in terms of stocks that we think, or you guys ostensibly think, are down too much, Service Titan, let's look at that one, because the stock was down 34% year to date. It is not down 34% today, and it's probably not down 34% year to date anymore, because stock's up near 7%. What's the deal with this surge today? Or your name?
So I added to this one, and I added to Toast during the unpleasantness last week, not this week. And I think the obvious thing to say here in the case of Service Titan, the company's only been in business been public for a year and a month or something like that. They just don't have the institutional sponsorship. So when people started selling software names, this is in all those baskets. The bottom fell out. People don't even know the story. That's why it got to as low as it got. It's the dumbest thing in the world if you think carpenters and plumbers and electricians are running out to code their own customer billing software. That's obviously never going to happen in a million years. So this to me is a screaming buy. That's why I added to it. And I'm not saying it goes right back to 100. I just can't understand the rational person that would think that this thing is under threat from AI.
Okay. So Zoom's another one that was...
No. Listen, Josh Brown, you just don't understand. Listen, you just don't understand, sir. It's clearly because Tesla robots are going to replace all the plumbers and electricians like in the next year, of course, like, oh my gosh. Anyways, just crazy market, crazy time, running to conclusions, fear, just wild stuff. But, as a long-term investor, stay focused on, where the money's at, stay focused on building stakes in great companies and play that game, okay? Pinned comment down there today if you want to join my private stock group, get access to my Discord chat with the 6, 7, 8-figure members. We're well over 3,000 members strong in the private group, access to all my course curriculums, access to exclusive weekly videos, see how I grade income statements, all that good stuff, okay? Back-to-back very good days. We're back rolling the public count, up $23,000 here today, coming off of a $92,000 gain yesterday. So public count definitely up and rolling. I posted this on my X page. You ever want to follow me on X, I always have that linked in the description area of all my videos. I posted this. I said AMD could go to $300 to $400 within the next 4 months. If you understand how fast a hype cycle can go and how insane it can be. Nvidia came out with banger earnings, ladies and gentlemen, and yet it's a yawn situation. The stock's hardly moving. Salesforce, they hate it. They hate this stock so much. They just can't stand it. Stock down after their earnings just came out. Trade Desk getting absolutely pummeled, down to $20 a share. This stock was $90 just a few months ago, ladies and gentlemen. Ouchie, what's going on there? Their earnings have come out. Snowflake, that stock is down after hours. That was a $275 stock just back on Halloween. And ever since then, it's been scary. It's been a horror movie. C3 AI, speaking about horror movies, oh my gosh. This is a stock they were comparing to Palantir just a few years ago. Check out this stock back in 2023. It was $36 a share. It's $8 after hours. Stock's getting pummeled. Their earnings just came out. Honest, my favorite $2 Chuck just came out with their earnings. It's still a $2 Chuck even after these earnings. Okay, in this video here today, folks, we got a lot to get into. This is a beast. First up, Nvidia. Second, Salesforce. Third, Snowflake. Fourth, Trade Desk. Fifth, C3 AI. Six, Honest, and then the seventh subject we'll get into in this video here today is a great hidden small cap banger of a stock. Their earnings came out yesterday. No one else talks about this stock other than me. I've over doubled my money on this stock, and I think the next double is coming up here over the next, we can call it year or so. And I want to share that stock with you guys in this video here today and why I'm so excited and the numbers behind it. Because this isn't just like, oh, just talk. Like, this is numbers behind this company, okay? And their numbers are blowing up, okay? I appreciate y'all for joining me. There's one thing and one thing all I need from you guys is a sign in my garage right here. It says hit the subscribe button and smash the like button. That sign's in my garage. I'm going to move it to the new house when we move to the new house. That's all I need from you guys. If you could please just hit that little like button, make sure to subscribe to the channel. I do appreciate it. Pinned comment down there today if you want to join my private stock group, my private wealth group, all those sorts of things. Join us with the 6-figure, 7-figure, 8-figure members. That will be the pinned comment down there. Access to all of my premium course curriculum so you can learn everything about this game inside and out. Access to 1000xstocks.com, access to the Discord chat, exclusive weekly videos. I just recorded the private group video yesterday, or actually it was 2 days ago. So all that good stuff, okay? Listen. Nvidia did exactly what I thought they would do. And if you watch the channel, you kind of know my opinion on this. I thought they would beat earnings, but I thought their guidance was going to be a banger, right? And this is exactly what they did. They beat earnings. It wasn't like a shock and awe when it came to their earnings for last quarter, but it was a shock and awe when it came to their guidance, right? EPS came in $1.62 versus $1.53 was expected. Revenue came in at $68 billion versus $66 billion was expected. Very solid beats for the company, but the shock and awe came where the guidance was at. And that's what I kind of thought was going to happen here with Nvidia. Guidance, much better than expected. Nvidia said revenue for the first quarter is going to come in at $78 billion plus or minus 2%. Analysts were expecting $72 billion. That's a pretty darn shock and awe, man. That's about as good as it gets. Look at this. The second A++ grade of an income statement. Wow. Of this earnings season, right? Palantir got one, Nvidia got the other one. Oh my gosh. Revenue up 73% year over year. Cost of revenue up 60%. That's great. Like if your revenue is up 73%, your cost of revenue is up 60%, you're winning. Gross profit was up 78% year over year. $51 billion in a 3-month span for gross profit. You got to be flipping my flapjacks. Research and development was up 48% year over year for the company, which is a very doable number when your revenue is increasing 73%. Now, if revenue all of a sudden goes down to, let's say, 20%, right, 25%, and your R&D still growing at a 50% clip, then we got an issue. Right? But for right now, it's all good. Sales general administrative, SG&A, was up 32% for the company year over year. Once again, your revenue is growing 73%, 32%. SG&A growth is nothing. Total operating expenses up 45% for the company year over year. Gross profit is up 78%. So guess what's going to happen to your operating income? It's going to fly. 84% growth in operating income year over year to $44 billion from $24 billion. Oh my gosh. Then they had this other income here, up 665% year over year there. Okay, so in total other income was up 415% year over year. Income before income taxes up a whopping 100% year over year to $50 billion from $25 billion the same quarter last year. Oh my gosh. Net income up 95% year over year. Diluted EPS up 98% year over year. Oh my gosh. You gotta be kidding me. $1.76 versus 89 cents. Unbelievable. A++. That's as good as it gets, man. That's as good as it gets. Put it in the history books. But what the heck's going on with the stock price? Shock and awe guidance, an A++ quarter, and yet the stock price is stuck. So what's going on here? Well, let me explain. If you remember, I think it was the last year or the year before, I made a prediction that basically Nvidia is going to be stuck between 125 and 200 for years, right? 200-ish range, right? And kind of just like Palantir. And the reason being is we have a situation here with Nvidia where everybody and their grandma knows the numbers are great and they're going to remain great, you know? But we are of the understanding growth rates are about to decrease quite rapidly as we tick on here over the next 1 to 2 years, right? So these shock and awe, like 70% growth rates, they do have to come to an end. Why do they have to come to an end? Because companies don't have there's a few reasons for this. One is companies don't have a lot of range to keep just going crazy with CapEx over the next few years. Like that's just mathematics. Look at what Amazon just posted for what their CapEx number. Dude, they don't have room to then go blow that CapEx up to 300 or 400 billion next year. They just don't, they can't do it unless they want to just absolutely load the balance sheet with debt, which they're not going to do, right? Meta, Google, all these companies, they don't have the room to go crazy with CapEx in 2027 and 2028. So if they increase, it's going to be very modest, which makes Nvidia's growth, guess what? Very modest. But that's not the only issue. They got this woman right here. This is a big issue for Nvidia. Nvidia, for the last several years, has not had to worry about any competitors. They haven't had to worry about anybody eating into their market share. They haven't had to worry about anybody else eating into their margins or anything like that. Those days, ladies and gentlemen, starting 3 months from now, are over. This woman right here is a huge issue for Nvidia over the next 2 or 3 years. And the reason being is AMD's revenues are about to explode, okay? Because of the 450 series, and then obviously we'll go into the 500 series after that, right? And what's going to happen here is, guess what? The companies that are increasing their CapEx after this year, Amazon, Meta, Google, and even a big portion of it for the back half of the year is going to start going to AMD's pockets. There's no such thing as a free lunch. AMD's revenues going insane doesn't just magically come out of thin air. That's extra money that Nvidia could be getting, right? And now AMD is going to be getting that money. And so what ends up happening is not a situation where Nvidia's revenues start to go down, because it's not a situation where like everybody's flatlines their CapEx after this year. Although if that happens, Nvidia's revenues will literally go down because AMD is going to eat market share regardless of what happens over the next few years, right? But it's just like the CapEx increases are going to be much, much more mundane for Amazon, for Meta, for Google, all these companies 2027 and past, because it's just math. Like they just don't have the room to go crazy with it, right? And double up their CapEx again or go up 50% again, right? And so AMD is going to eat a lot of Nvidia's money they could be getting essentially over the next few years. And we've seen this in the stock price, right? It's not like I'm the only person that's kind of figured this out. The market's figured this out. This is since those April 2025 lows. Remember, prior to this, Nvidia smashed AMD stock. It wasn't even close, right? But last year began the upcycle of where AMD significantly outperforms Nvidia over a multi-year trend, essentially, right? And it already started. So since those April lows, AMD stocks up about 170%, Nvidia stocks up about 103%. So both have done well, but obviously AMD's, and this outperformance, ladies and gentlemen, is about to get much more extreme. And Nvidia's caught in a very, very tough position, okay? And then we'll move on to Salesforce and these other subjects. Let me explain this because this also matters for AMD investors out there to understand this. Nvidia's in a pickle. What do? AMD is about to start stealing away a lot of revenue from you. So you're either in a situation where you let them, right? And it just is what it is, or you try to fight them off and lower your prices substantially to try to undercut them, which then your margins are wrecked. So then all of a sudden it looks like you don't have pricing power anymore. And you go from commanding these insane margins, and Nvidia has been commanding the last several years, to, I don't want to say bad margins, but not very good margins, right? Because we know AMD's undercutting on price, and they're giving strategic relationships where companies are going to get ownership in the company as long as they fulfill these commitments, like Meta, like OpenAI, right? So Nvidia's in a tough position. The company's a beast. Their products are great. We all know that. There's a reason this company's near a $5 trillion market cap. But everybody's starting to realize, crap, man, these growth rates are going to start becoming a lot more mundane. They finally are about to have competition starting 3 months from now. And that makes you into a weird situation. That's why no one's willing to buy Nvidia. They came out with a shock and awe, and at the end of the day, what's the stock got to show for it? They came out with perfection earnings. Perfection. And what does the stock have to show for it? That just shows you investors like, dude, like, yeah, it's so great, but we know what's coming here, right? We know what's coming. Next up here, Salesforce. Then we'll get a Snowflake, Trade Desk, C3 AI, Honest, and a great small cap banger of a stock. Okay, Salesforce. Their earnings per share came in at 381 adjusted, keep that in mind, versus 304 was expected. Revenue came in at barely beat expected numbers here, so not a super exciting like numbers from Salesforce here, right? As far as guidance went, guidance for the first quarter included $3.11 to $3.13 adjusted EPS on $11.03 billion to $11.08 billion. Analysts surveyed expected $3 of EPS, so slight beat there, and expected a guide of $10.99 billion, so slight beat there. For the full year, Salesforce called for let's call it $13.15 billion of revenue, or excuse me, $13.15 EPS roughly, right? Analysts were at $13.12. It's not a big difference, right? As far as revenue went, basically Salesforce is around $46 billion in revenue expected. That's right where the guidance was. It was right where, kind of like analysts were expecting. So we got sleepy guides, sleepy beats, and that's just not going to cut it for a stock that people are scared right now. Let's just call it what it is. You can't come in with sleepy guides and sleepy beats when, Wall Street's scared. They're frightened right now, right? I'll put it to you like this. You got a little kid. Little kid wakes up. They had a nightmare, right? They need more than just, it's okay, go back to sleep. It was just a dream, right? Sometimes a little kid, you got to walk them back to their room, hold their hand, got to lay in bed with them for a bit, put on the night light, right? Make them feel comfortable. That's what you need to do, what Salesforce needed to do. And by Salesforce not coming in and smashing anything, they didn't come in and smash guidance. They didn't come in and smash last quarter's numbers. It's just kind of like, it's there. Maybe slight beats. That's not going to make Wall Street comfortable. Wall Street's very uncomfortable right now. Investors are very uncomfortable, and so that's why that stock sold off. And this was a situation where this stock was primed to move up big on these earnings. But you put out very small beats, and people are like, no, we're still scared. So we can't buy this. If anything, we sell it off, right? Now, you want some good news? I do have some good news for you here. Okay, listen. Salesforce is seeing benefit from its stake in Anthropic. If you didn't know, Salesforce is part owner of Anthropic, generating an $811 million gain on strategic investments in the quarter. That's up from $96 million in a year ago quarter. This is Benioff talking here. He says, I think we just put another $100 million into the new round. We're at about $330 million into Anthropic as far as invested money. It's almost 1% of Anthropic. So they own about 1% of Anthropic, which, if you think Anthropic's on its way to becoming a $1 trillion valuation long term, well, shoot, there's $10 billion there. So we'll see where Anthropic valuation goes long term, but there's some thinking it's on its way to becoming a $1 trillion type valuation, right? But we'll see about that. Even if it's a $500 billion valuation long term, well, shoot, you still got $5 billion there, right? Benioff basically said he wished he had more invested here, right? Now, Salesforce also doing a big buyback. They're talking about like a $50 billion buyback, like an insane number, which, the market cap as of tomorrow should likely be 170 to 180 billion. So you come in with a $50 billion buyback, that's extreme. That's an extreme sized buyback there. So my opinion is that Benioff is very confident in his company's growth and where it's going, right? And by the way, Agent Force growth looked phenomenal in the quarter. That business continues to grow rapidly, which is what we need to continue to see, right? If Benioff's really that confident in the company for the next 10 years, do the $50 billion buyback. It makes a lot of sense. If he's really confident like that and they've got it for the next decade, you'll never get the stock as cheap as it is right now. This is like a once in a, decade experience here. And so now, if you're at all unconfident, you don't do a buyback like that. It's too risky because you might need that capital to buy out other companies and do this and do that. But if he's like, dude, Agent Force is going to become massive. We're on our way to becoming, a $60 billion plus run rate company per year. And then we're going to 100 billion after that. Do the buyback now because you'll never get the stock as cheap as you're getting it this year, essentially, right? As far as the income statement went, I gave him a C grade overall. Total revenues, 12% growth year over year. Cost of revenues up 13%. This is one of those things that's going to make it's going to make Wall Street uncomfortable. When they see revenue up 12% and cost of revenue up 13%, even though revenue is a way bigger line item, right? So gross profit was up 12% for the company year over year to almost $8.7 billion from $7.7 billion the same quarter last year. R&D was up 14%, sales and marketing up 16%, G&A was up 18%. Those are no things you want to see because revenue is basically being outstripped on a percentage growth basis. Restructuring was down for the company year over year. Total operating expenses grew 15%. Not what you want to see when your gross profit's up 12%, right? So overall income from operations went to $1.869 billion from $1.82 billion, only 3% growth year over year. That's why I gave him a C grade here, because of that part of the income statement. That's not good, right? Expenses too high. A lot of that's probably in regards to Informatica acquisition there, so do keep that in mind. They had this gain on strategic investments, which we spoke about before, the Anthropic deal of $811 million. So income before income tax is up 32% for the company year over year. Net income up 13%, diluted EPS up 18%. So the Anthropic situation kind of saved them in regards to their bottom line. Because if you just look at the raw numbers, you're like, okay, revenue up 12%, diluted EPS up 18%. Bravo. Banger, baby. But you dig a little deeper, and you're like, oh, no, their expenses were really high here in the quarter, and income from operations was only up 3% despite revenue up being up 12%. No bueno. So, my thing with Salesforce is I have full belief Benioff knows what he's doing here, right? I need to keep adding to this position. It's about a $191,000 position. I need to keep adding to this position throughout March, and I need to be in a place where I feel comfortable being fully built out in Salesforce. And I need to have that by the end of March, essentially, right? That doesn't mean I'm done buying Salesforce after that across my portfolios, but I need to add as aggressively as I possibly can here, right? I'm trying to buy as many shares as I can while the company's also buying as many shares as they can, right? And I'm very confident Salesforce has a future on lock and Benioff knows what he's doing here, right? And so I'm going to keep adding. It's a situation where we got muddy water here, right? And I'm like, I think there's gold in there. I think there's gold in there. And everybody's like, oh, it's muddy. It might be a piranha in there. It might be an alligator in there. I don't know. It looks scary, right? And that's Salesforce right now. And I get it, right? But I think there's gold in there. And time will tell, right? Time will tell. That's the fun thing with the stock market. Time always tells. Snowflake, next one up here. So Snowflake is a D minus. Income statement here, revenue $1.28 billion versus $986 million same quarter last year. Cost of revenue up to $426 million from $333. And gross profit went very nice to $857 million from $653. So that's impressive. They got still spending problems like crazy. Their operating loss ended up being $318 million. I mean, gosh, their spending is just ridiculous. Gross profit, $857 million. And yet you still find a way to have an operating loss of $318 million. They just continue to have spending problems at this company. It's like I tell you guys, you got to have more income than expenses. What's the number one key to being a successful investor in the market? It's not balance sheets. It's not income statements. It's not cash flows. It's not P ratios. It's having more income than expenses. So then you're always in a position to buy every week or every month, right? Same thing with a company. And so you look at a company like Salesforce, like Snowflake, they bring in so much money, so much gross profit. And yet by the end of the pie, you get to the end, there's nothing left. And they end up taking a huge loss. And it's like, dude, man, so that's Snowflake for you. It's kind of been the story for Snowflake. It has been the story for Snowflake basically ever since they went public. It remains a story. I might get interested in the stock at some point in time, but gosh, I got to see them at least get close to profitability. They're a mile and a half away, right? Next up here, Trade Desk. This stock's getting slaughtered. People are wondering, is this a great opportunity? What's going on here with Trade Desk, TTT? Well, I rated them an A- income statement. It's actually very good income statement for the company. Revenue went to $846 million from $741. Platform operations up to $163 million versus $135. That's the only kind of reddish thing there. Sales and marketing $173 versus $150. We'll keep that. Technology and development $130 versus $127. That's very impressive considering how much revenue grew, right? G&A actually fell for the company year over year despite revenue going up $100 million plus year over year. So as far as G&A, $122 million versus $131 million in the same quarter last year. Total operating expenses went to $589 million from $545. That's not bad. we got a situation here where the revenue's up, $100 million plus, right? What, $105 million revenue's up? And meanwhile, total operating expenses is only up, what is that, $54 million? It's nothing. Income from operations, $256 million versus $195 in the same quarter last year. Income before income taxes, $270 versus $221. Now, they got killed on income taxes. Income taxes wrecked them in this quarter. They took an $83 million hit in income taxes versus $39 million in the same quarter last year, okay? So that made their net income growth and EPS growth not look that impressive, but it's because the income taxes just screwed them in this quarter versus last year. But net income, $186 million versus $182 in the same quarter last year. Diluted EPS, 39 cents versus 36 cents. So I'm going to give them a pass on the income tax situation. So I gave him an A- grade here. Very good, very good numbers. But the scary thing, look at the revenue increase year over year, okay? They were at 22% in the same quarter last year. And look at the new number. New number is only 14%. That's scary. That's 800 basis points less of revenue growth. No bueno. No bueno. Now, net income margin also fell for the company significantly year over year, which is also scary if you don't dive into the income statement, which not everybody does, right? So it fell to 22% from 25%. But once again, that's because that huge income tax situation there. This is the scarier part about, oh crap. The revenue growth went from 22% this time last year down to 14%. So then people are extrapolating like future growth. And they start thinking, okay, where are we at this time next year in this quarter? What do we have? 9% revenue growth? 7% revenue growth? That starts really freaking people out because then they start thinking about the next year and like, okay, what are we at then? 3%? 1%? Revenue starts going down for the company? I understand it. However, on a good front, some good news for the company, customer retention remained over 95% during the year. It's good, as it has for the past 12 consecutive quarters. Good news for the company overall when it comes to that, right? No. Also, the company is buying back shares like a madman. The company used approximately $423 million in cash to repurchase its common stock in the fourth quarter of 2025. The company used approximately $1.4 billion of cash to repurchase stock. At an average price, oh no, average price of $52.60. The stock today is $20. Oh, if they just waited, right? If they just waited, they way overpaid. Oh no. The company has approximately $150 million left for repurchase. So, I mean, the good news is they're buying for cheap, right? Still, but it's just like, gosh, they blew so much money in the 50s. And it's like, you could have bought it in the 20s today. That money would have went so much further, right? But this is a stock that was $90 back in August. It's been a brutal stock. It has my interest. I'm going to do more digging here. I'll likely listen to a conference call. I'm going to do more digging on their business model, how bad it's being disrupted in this whole AI wave. And you might hear more from me in the future about Trade Desk, but right now, we'll see. C3AI. Then we get an honest and then a great hidden small cap. Okay. C3AI, no bueno. No bueno. Their revenue went from $98 million down to $53 million. Their gross profit went from $58 million down to $9 million. I had to do a double take on these numbers. I'm like, wait, is that accurate? Like I had to do a double, triple take. I'm like, no, wait, what? Is it that bad at C3AI? Oh my gosh. Net loss, $133 million for the company in this latest quarter versus $80 million loss in the same quarter last year. Diluted loss, 94 cents versus 62 cents. Guys, this is so bad. It's to the point where with C3AI, where you start worrying about, is this company end up going bankrupt? Literally, that's what you start worrying about. It's a mess. I don't know what's the fix here. I guess just no one wants their product, but they're spending like drunken. I mean, this might be the most poorly run company in the whole stock market. I'm not kidding. This is awful, ladies and gentlemen. This is a good example of arguably one of the best income statements you'll ever see in history. I just showed you it in this video with that Nvidia report, right? And now I'm showing you one of the worst income statements you'll ever see in your life. This is awful, ladies and gentlemen. Think about this for a moment. They lost over double the amount on the bottom line that they had come in on the top line. almost over double the amount. How's that even possible? Oh my gosh, ladies and gentlemen. And this is why there's a big difference between getting it right and getting it wrong when you're an individual stock picker, and why it's worth putting in the work to understand these companies, right? This is the same company that got put into the same sentence as Palantir years ago. They thought like they were the same type of company, right? And look at Palantir's given a return of 1,700%. I've taken disgusting amount of gains in Palantir stock over the past year, right? So many profits, it's incredible. Thank you, Palantir, for that, right? Thank goodness I picked Palantir instead of C3 AI, because if I picked C3 AI, I'd be looking on unbelievable losses right now in a situation where I'm not sure the company's even going to be solvent a few years from now. At the rate they're going, I'm not sure. With a Palantir, I'm like, okay, valuation's super high, but I got to take insane profits and I still get to hold some shares, and the company's a banger. So man, you gotta do the work when it comes to these companies, because woo, there's a big, Palantir's been a life-changing stock if you've owned this stock over the last 3 or 4 years. Life-changing. And C3 AI, if you've been heavily invested in that, has also been a life-changing stock, but for the negative, right? If you put, 20% of your net worth in C3 AI 3 or 4 years ago, you don't have much to show. You put 20% of your net worth in Palantir 3 or 4 years ago, you're likely probably a millionaire or multimillionaire now. It's just such a difference, right? And these two companies, I understand not everybody's been around a while. Like some of you guys watching this, you might only be in the market the first year or two. If you were around in the market, and I know people, like, let me know in the comments if you were around back in 2021, 2022, 2023, you guys remember when Palantir and C3 AI were put in the same, they thought these were like very similar companies, and they thought they were going to like do well together or bad together. Remember that? Gosh, could that have been further from the truth, right? Alrighty, next one up here, $2 Chuck Honest, and then we'll get in a great hidden small cap. So when it comes to Honest here, so if you've been following the Honest story, we all knew that they're basically going to get out of a bunch of product categories that have been, let's call it bad product categories, things that like add revenue to the company, but end up hurting margins, hurting profitability, and to be quite frank, take focus away from the company. And so Carla announced this last quarter, and investors hated it because they're like, oh my gosh, this means, next year's numbers are all going to be screwed up, meaning 2026 numbers, right? They're going to be all screwed up because they're getting out of these business lines, and it's going to screw up their revenue in the short term, make their revenue look bad and their margins look bad and all those sorts of things. As a long-term investor, I want a company always to make the best long-term decision for the shareholders. And since Carla came in at this company, she took this company from a near bankrupt, like they were on their way to bankruptcy. I'm just going to be completely honest, okay? And she now has this company in a great position where the balance sheet's loaded with cash to the sky. She's increased their margins dramatically. And she's made some very tough decisions around headcount, around getting out of certain business lines and things like that, it makes your revenue look bigger, but at the end of the day, it's hurting your company overall. And I think it's a right decision. And so I'm fully back her in regards to the situation, right? So revenue decreased about 12% year over year because they got out of these business lines, right? Organic revenue, however, was up for the company on a year over year basis. Okay. So that organic revenue basically just meaning businesses they're staying into, right? Track channel consumption for the company grew 3.4% compared to comparative categories, which were up 2.5% in the period. So they're outgrowing categories. That's good. Gross margin came in at 15.7% compared to 38.8% in the same quarter last year. The decline was primarily driven by the discrete inventory write-down on apparel and fixed asset impairments related to the strategic exits of, Honest, obviously, categories they're out of. So that's like a one-off type situation here in regards to screw up of their margins. Right now, the company's sitting on a shocking number of cash now. This company has almost $90 million in cash and cash equivalents with no debt outstanding. Listen, ladies and gentlemen, Honest is a $200-ish million market cap, somewhere in the 200 range. I don't know. I can't remember exactly where it's at. It might be at 225, 250, 275. It's in the 200 range. Okay. And almost $90 million in cash sitting around. It's a shocking amount. I mean, to put this in reference, this would be like Nvidia being trading at a $5 trillion market cap and having $2 trillion of cash sitting on the balance sheet. I'd just be like, what? They got $2 trillion of cash sitting on the balance sheet? That's what we're talking about here with Honest. This is insane, right? So they announced basically they want to do a huge share buyback, which I applaud that, right? No, as far as the 2026 outlook, this is actually a good outlook. Very, very good. This makes me very optimistic about Honest. As previously disclosed, the company's long-term financial algorithm consists of revenue growth of 4 to 6%, right? So they're talking about revenue 306 mil to 312 mil here, right? Organic revenue growth of 4 to 6%. So that's businesses they're staying into, not the ones they're exiting, right? Because obviously if you're going to exit a bunch of businesses, your revenue is going to be down year over year. But the businesses are focused on, the ones they're not getting out of 4 to 6% revenue growth. Look at the adjusted gross margins here. Talking about low 40s. We're taking the adjusted gross margins to low 40s. Okay. Adjusted EBITDA, $20 to $23 million range. Once again, Honest's market cap's in the $200 million range right now. So crazy numbers, right? Whew. Yeah. So as far as their income statement, I had to give them an F grade, but it's really just around these business exits and these one-offs and how it's killing profitability and margins in the short term. But a lot of it's like kind of more non-cash expenses, right? And so like it is what it is. Like their income statements are going to be messy here in the short term for the next few quarters, but like if you have a long-term vision, you're running your numbers, it's like, this is the best thing ever for the company, right? So here's the deal. I'm a buyer of Honest, and I'm going to listen to the conference call on 1000xstocks.com tonight. We do have the live 1000x feature now to listen to conference calls live. I haven't gotten a chance to listen to it yet. I'm going to listen to it tonight. As long as everything checks out, I'm a buyer of Honest, okay? I'll probably be a heavy buyer, actually. I'm more confident in the company than ever. If that conference call is good, I'll load up. We'll own the whole company, Honest and me, okay? So great hidden stock, a banger stock. Let me show you what it is. This company right here, it's my 5th best percentage gainer in the public account. 5th best. And this might shock people because it's beating companies like Amazon, which is at a 50% gain for me. It's beating companies like Cheesecake at a 61% gain for me. It's beating companies like Estee Lauder at a 62% gain. It's beating even great AMD at 88%. It's beating Google McDougal, which is at about 100% gain, and it's even beaten Celsius, which is about 107% gain. It's my 5th best percentage gainer. Oh my gosh, I have lots of bangers. It's Revolve, RVLV, sitting on 118% gain on this stock. RVLV came out with earnings yesterday. They reported a grade A income statement. Net sales 324 mil from 293. This is an e-commerce company, sells apparel, very big with millennials, but even looks like they're going to be even bigger with Gen Z females, okay? Cost of sales 151 mil versus 139 mil. Gross profit went to about $173 million versus 154 in the same quarter last year. They kept fulfillment, selling, distribution, marketing, G&A all in check. So income from operations exploded for the company year over year. They did over $20 million income from operations in the quarter versus $11 million in the same quarter last year. Net income went to $18 million from $11 million. Diluted EPS went to 26 cents from 17 cents. For Revolve, I haven't got a chance to listen to our conference call. I'll listen to that tonight after Honest call. And Blair posted this in the private stock group's Discord chat, right? He said, early 2026 momentum was strong. Net sales up about 16% for the first 7 weeks. That's impressive. In retail, in clothing retail, 16% growth? Even the last quarter was what, low double digit growth? Like, banger. So Revolve, no one talks about it. It's like, literally, I don't think anybody in the world talks about the stock other than me. And it's funny, in the Discord chat, we got 3,000 plus members in the private stock group's Discord chat. I think the only 2 people that post in that entire Revolve chat, because we have like chats for all the different stocks, and obviously like AMD and Palantir and stocks like that are always super busy, right? But like in terms of the Revolve chat, I think it's just Blair and me like post stuff in there, and like no one else, because no one cares about the stock and no one pays attention. And I'm like, dude, I think this is another company people should pay attention to. I understand a lot of people in the stock market, like it's like 90% male. My audience is probably 90% male, only about 10% female. I think I might be up to 12% female. Shout out to the females out there. Hello. Okay. But when it comes to Revolve, like a lot of people are like, I don't get it. Like they sell dresses and expensive clothes and like purses and handbags, and they started getting a beauty care. And I don't know, man. Think you might want to do some research on this one. You might want to do a little research on Revolve. That's all I'll say about that, because they are back. Ladies and gentlemen, we have a lot of earnings going on. We have a lot of craziness. Stay focused on the long term. Make sure your company's trajectories are where you want them to see them over the long term and not just focused on the short-term stock prices. For noobs in the market, they get focused on the short-term stock price move. For people that are experienced, people like myself have been in this game 17 years, we focus on what's actually going on with the businesses, the fundamentals, the financials, the conference calls, the stuff you need to be focused on. If you want to take your investing up to a much higher level than where you're at right now, join my private stock group, apply to join it, pin comment down there, click on that, fill the form, we'll see if we can get you access in there. All my course curriculums, private Discord chat, exclusive weekly videos, all that good stuff. It's $92,000 up for the public count here today. An absolutely massive day. Kind of came out of nowhere. And we have many big things going on out there. Right off the bat, we'll talk about AMD. Huge news happening in regards to AMD here today. Let me be very clear, folks. This is the start of a multi-month hype cycle that is going to occur in AMD. Is going to be extreme. So we'll talk about that, talk about where AMD stock's headed from here, all that good stuff. PayPal stock popping big within the last couple hours of trade. Talk about what's going on there, how realistic it is, all those sorts of things. A lot of excitement starting to really come into PayPal stock. From there, I want to talk about Cava. They did report earnings here in the last hour. We'll discuss Cava there. Okay. AMD CEO Lisa Su went on CNBC 5 hours ago, spoke about what's going on here with the business model. I want to react to that. And then last one I want to react to is actually a video from yesterday that I thought would be a good one to kind of close on here, and navigating the SaaS apocalypse that's going on out there. It's obviously extreme. So we got a lot going on, folks. I appreciate every single person for joining me here today. One thing only I need from you guys before we get rolling. If you could just smash that little like button, hit that little thumbs up icon. That's all I need from you. I appreciate every single person that does it, and also thank you every single person that is subscribed to the channel with notifications on, all that good stuff. Appreciate you for being here. Pin comment down there today if you're looking to apply, join my private stock group, private wealth group. We have definitely slowed down as far as people hitting 6 and 7 figures over the last couple months, but we still got people hitting it. This is just over the last few weeks. My wife had me sign up these 12 folks hitting 6 figures plus in a portfolio, and 2 individuals hitting 7 figures plus. So good to see some people out there hitting records. And these awards, by the way, I send these complimentary to members when they hit these milestones inside the private group. And the 7-figure folks actually send you a custom Nike hat, 1000X Nike hat as well. Okay. Alrighty, pin comment by there if you want to down there if you want to join us in the private group. Access to all my course curriculums, Discord chat, all that good stuff, including exclusive videos. I recorded one last night. It was a 20-something minute beast. Okay. Alrighty, so let's talk AMD right off the bat here. Okay, listen. This is good news, very good news, okay? AMD stock surges after chip deal with Meta. Now, these are 2 of my biggest investments in the public account, so really good to see this. AMD unveiled a long-term deal. This is the sort of deal I want to see. Long-term deal to supply Meta with computing power on Tuesday. The stock jumped even though it included a warrant grant to Meta for as much as 10% of the chip maker. Now, in order for Meta to get the 10% of AMD, which is fascinating because these are like 2 of my biggest investments, right? And one of my biggest investments is going to own like my second biggest investment. This is like a fascinating whole situation for me to go through, right? But in order for Meta to get that 10% of AMD stock, Meta has to obviously fulfill these orders and order a ridiculous amount of AMD chips over the next several years, which obviously AMD is going to benefit massively from, right? And kind of fight off the Nvidia ecosystem there. Additionally, AMD is supposed to give potentially up to 10% of the company to OpenAI if OpenAI fulfills all their contracts. Now, there's a lot of questions about OpenAI and if they're actually going to have the money to do this. So with OpenAI, there's a lot of questions. With Meta, there's not really questions. This is more like a sure thing than OpenAI, because OpenAI has to raise a lot of money. Meta makes a fortune of money. So Meta is going to be able to likely fulfill this. OpenAI, it's like a question mark, right? So this is actually something you need to take way more serious than the OpenAI potential, okay? Under terms of the multi-year agreement, Meta will buy 6 gigawatts of graphics processing units, GPUs, from AMD to power Facebook parent's next generation of AI infrastructure. AMD has also agreed to award Meta a performance-based warrant of up to 160 million AMD shares, or roughly 10% stake in the company. So now Meta is very incentivized by AMD doing well over time, which is brilliant. It's very, very brilliant. genius, actually. And the reason being is if you look at what Nvidia has been doing, Nvidia, if anything, they've been investing into companies, which can also be a smart strategic decision. But something that's next level good is if you're actually making your big customers be a shareholder of your company, because now Meta, OpenAI, if they're going to get actual ownership, a piece of ownership of AMD, you're very financially incentivized to order more products so the company does better, the stock does better, right? And you make a bunch more money. And then if you want to sell off that position 2 years from now, 4 years from now, 6 years from now, 10 years from now, you can do it for likely a huge chunk of change, right? Think about it. If AMD goes to $1 trillion market cap and let's say Meta owns 10% of the company, that's $100 billion stake. If Meta spends $100 billion and then they end up getting that back because the stock goes up, it's genius. It's literally genius for these. Like Lisa Su, man, she's brilliant. Okay, not just in terms of tech, but in terms of understanding business and how to fight the Nvidia kind of monopoly they have in this space right now. I mean, and Jensen doesn't like this. I could tell when Jensen was talking about it when the OpenAI deal first came out with AMD. He's like, talking down, like, why would you give away 10% of your company if you feel like you got a great product, those sorts of things. And I'm like, dude, this is genius. If I was Jensen, I'd be upset. Okay, listen. Meta said it will use the chips to run its AI models, a process known as inference. Now, this is the big thing. Training has been obviously a market Nvidia has completely dominated from the go, right? The training of these models, but the way bigger opportunity long-term, based upon what I've heard from Jensen over time and Lisa Su, inference is actually going to be the way bigger game. And inference is where AMD's actually going to be able to compete against Nvidia head on over the next 5-10 years. The company has projected that it will spend as much as $135 billion in AI data centers this year. We, quote, we need massive scalable compute power that can handle our growing demands for our AI workloads, said Meta in its own press release. Our partnership with AMD, which builds on existing collaboration, will help us meet those needs. The deal is almost identical to the one ChatGPT maker OpenAI that AMD unveiled back in October. Both deals are for AI servers to fill up to 6 gigawatts worth of AI data centers. In both deals, deployment begins in the second half of this year, 450 series. Both companies can get up to 160 million AMD shares virtually free. Are they free? Based upon hitting milestones for deployment and the AMD stock price. The last tranche of shares would convert above an AMD stock price of $600. Yesterday, AMD was trading for less than $200 for reference. The full terms for the vesting of the shares were redacted in AMD's filings with the SEC. The deal structured the warrants as sales discount for tax purposes, and Meta agreed to some restrictions on how it can trade or the shares it buys. The CFO said Tuesday that the latest partnership would drive substantial multi-year revenue growth for AMD, but it's more significant than that. The partnership represents a step forward for AMD as it looks to challenge Nvidia's dominance in GPUs. Nvidia stock, blah, 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 right? Analysts characterize the agreement as a vote of confidence in AMD's AI hardware. However, having to give up 10% stake suggests it could be struggling to generate organic demand. Not really, in my opinion. I think they got that wrong. Like, if you look at just the tech versus tech, and you look at AMD's highest end chips versus Nvidia, AMD's now at a place where they're competing very close with Nvidia, right? So, like, that's just on the tech front. So, and obviously they now have the racks, like they had the whole deal to compete directly with Nvidia in the back half of this year and then into 27, 28, 29. So I don't think it's that at all. He also noted Nvidia remains a clear top dog in AI chips. Yeah, we all know that. That's why Nvidia has like a $4 trillion market cap or something on it, right? And AMD certainly doesn't have that. So I think this is genius, man. I think this is genius. I love this deal. I love that one of my companies going to potentially become a big shareholder in AMD. And like I said, this to me, way bigger than the OpenAI deal. Because once again, you got to understand, OpenAI, we don't know if they're actually going to be able to raise the capital they are supposed to raise. They're supposed to spend a fortune with Oracle and with AMD and with Nvidia. We don't know. It's a question mark. With Meta, this is more of a done deal. Zuckerberg's committed to spending fortunes of money over the next few years. We know that, right? And they got it like that. They're not going to have to worry about, crap, we need to raise $200 billion. No, because they make fortunes of money. Their revenue's exploding. You know, the cash flow from operations continues to pour in. So, you know, if Meta is supposed to spend $60 billion over the next few years, they're going to spend $60 billion over the next few years and end up with 10% ownership of AMD. That's my opinion on that, right? So, you know, this was posted on 1000X here today. By the way, if you ever want to follow me on X, I always have it linked in the description area, all my videos. You might also want to follow the 1000XX page as well if you're really into stock market stuff, where that one posts a lot more news related stuff and things that are going on out there, right? But, you know, I posted this on 1000X today. What's your AMD price target for the end of 2026? I said a big number. I said 330 to 375. But understand, ladies and gentlemen, we are now entering into a multi-month hype cycle for AMD stock. That's going to be pretty extreme in my opinion. You have this deal announced. You might have more deals coming, keep in mind. Nvidia numbers are on deck. Nvidia numbers are going to be likely a banger with a great guidance as well, right? Probably ahead of the street. And as you get closer and closer to 450 series going into production second half of the year, you're going to get more and more excitement here. I think AMD's next quarter, not only are going to beat numbers, but the guidance is going to be very strong, likely much ahead of where the Wall Street is. And so I think you're just at the very beginning innings of a multi-month hype cycle that is going to come into AMD stock and be very powerful. And so just understand, when AMD goes through a cycle like this, in a matter of 3 or 6 months, the move can be parabolic. You might assume like, oh, it's just kind of like a steady gainer. No, it's not the way it works. Like AMD could go 200 to 300 in less than 60 trading days. AMD can go from 200 to 300 in less than 60 trading days. Let me be very clear about this, okay? So if you assume like it takes forever, no, AMD, the moves are dramatic. And when, people aren't feeling it, that stock can sell off 30, 40, 50% quick. Not in years. No, we're talking in a couple months. It can sell off 30, 40, 50%. But when it gets hot, dude, you can see that stock make a 50 to 100% move like that. Like if AMD went 400 in the next 4 months, would I be shocked? Not at all. Like if AMD stock price said 400, 4 months from now, would I be like, oh my gosh, I can't believe this has happened? No. Be like, yeah, that sounds about right. That's AMD. Like, everybody's hyped and excited about the next generation chips and they're front running it. That's AMD, okay? So keep that in mind. We'll come back to AMD in a bit when we react to the Lisa Su interview. PayPal starting to see a lot of momentum. This stock popped huge yesterday, popped huge again here today, right? Fintech startup Stripe is reportedly in early discussions in potentially buying PayPal. Okay. PayPal stock surged 7% Tuesday following a report that fintech startup Stripe is weighing buying the payments platform. Bloomberg reported the news, so that means it's legit, not just some random person on X, right? Citing people familiar with the matter, and said the discussions are in the early stages. Okay, early stages, so you can't get too excited about this. This is no done deal. It's in early stages, right? The report said Stripe is considering buying all or some segments of PayPal's business. So here's what Stripe could be up to, okay? Stripe could be up to just buying the Braintree side of the business, which is more seen as a direct competitor to Stripe. That could be a potential. Or they could just buy the whole company, right? And then they get the consumer side of the business, which is PayPal and Venmo. And the way they could connect that and integrate that and grow that, if they did a good job, they could make PayPal and Venmo much more dominant than what they are right now. Much more dominant if they just bought the whole company. But you have to integrate it well. You have to do a meta type approach here where you're kind of like, it's in people's favor to use PayPal, to use Venmo, right? Kind of like Meta always does with their products, where they'll buy something like they did Instagram years ago and then incentivize you to use Instagram when you're on Facebook back in the day, right? And nowadays, if you use Instagram, they really incentivize you to use Threads, the next product. And so I could see them buying the whole company. I could also see them just trying to buy the Braintree side of things. The news comes a day after reports that the buyer interest has picked up following the company's recent stock slump. PayPal and Stripe declined to comment on the report. PayPal, which is grappling with slowing growth in an increasingly competitive financial payments industry, has plummeted more than 19% since the start of the year. Earlier this month, the stock plunged, blah, blah, blah. We all know that. We don't need to go over that again. Meanwhile, fintech startup Stripe hit a $159 billion valuation on Tuesday, following a secondary stock sale for employees and shareholders. That's up from $91 billion a year ago. Stripe said in a business update that its revenue suite is slated to reach an annual run rate of $1 billion this year. I thought it would be actually a lot higher than that. Stripe, which ranked 10th on CNBC's Disruptor 50 list last year, has transformed into one of the most valuable private companies yet, and recently acquired billing startup Metronome in January. Stripe co-founder and president John Collision told CNBC's Andrew Ross Sorkin on Tuesday that the company isn't yet aiming for an IPO, which would sidetrack its current product and business. I mean, the other great thing they could get if they get with PayPal is, guess what? It's kind of genius. They get a huge, great, profitable business. So Stripe's profitability would look amazing right away. Even if Stripe is losing money, which I don't know the whole financials behind that because it's a private company right now, but let's assume Stripe is losing money as a company right now, okay? As soon as you buy PayPal, there's no way Stripe is losing enough to like offset the amount of money PayPal has coming in all the time. So you buy PayPal at, let's say, $75 a share, $80 a share, $90 a share, or something like that, right? And instantly you have a cash flow generating machine of a business, insanely profitable. And then you have the integration, you have the Braintree side, and then you have the integration of PayPal and Venmo, and what you could build that into in an overall ecosystem of payments. That could make you very, very strong. And so if I was Stripe, I would definitely try to do the deal. If I was PayPal board of directors, I would try to do the deal as well. I think it makes a lot of sense. At this point in time, because the stock's gone so low down to the 40s, if you can sell for $80 a share, $75 a share, $90 a share, take the money and run. Take the money and run. And so it would make sense for all sides. It would make sense for all sides, right? So we'll see what happens. If I got a vote to sell PayPal at $80 tomorrow, guess what? I would vote yes on it. I'm ready to say, let me make money on this position and let me go move that money elsewhere. PayPal's been a value trap. Let's just call it what it is, right? It's growing revenues, but very slow. It's growing profits, which has been very nice. They're buying back tons of shares, but, they're just having trouble growing the business. And it seems like it's probably going to stay that way, which makes it kind of a value trap situation. And so plug it into a company like Stripe, become very profitable. So we'll see what happens. Keep in mind, now that Stripe's interested, others might potentially enter and become interested as well. Could somebody like a Visa potentially want to, buy out PayPal? Potential. You can't get too excited about these things, but I could see that being a potential. Or somebody like American Express, right? Potential. Somebody like MasterCard, potential. There's many potential buyers out there for somebody like a PayPal. You could even say maybe some big banks might be interested. You could even say, would somebody like a Robinhood want to make a move? I don't know. Or somebody like a Coinbase? I don't know. They would have to take out a lot of debt to make a deal like that happen. But gosh, immediately your profits explode. Your user base explodes. How you could integrate those products across to each other. So I think a lot more companies than just Stripe should be looking at PayPal right now. But I do think Stripe could be the main guy looking at them right now. Okay, so we'll see what happens there. Now Cava, before we get back into AMD and talking about the SaaS apocalypse, they reported earnings here. I grade them a D-. Income statement here. Revenue was very nice, $274 million from $227 the same quarter last year. The issue was food, packaging, and beverage was up 23%. Labor is up 21%. So you don't want to see any of the expenses growing at the same growth rate as revenue, and especially if it's outstripping it. That's not good news, okay? Occupancy was up 22%, other operating expenses up 27%, total restaurant operating expenses up 23%, so they grew at a faster clip than revenue. You don't want to see that. General and administrative expenses up 14% for the company, so that's actually good. That's a much slower clip than revenue. Depreciation and amortization grew at 23%. Pre-opening costs exploded to 71%. They are open a lot of restaurants right now, right? So total operating expenses up 22%. Not good. Income from operations ended up falling 29% year over year. Income before income taxes was down 21%. Net income down 94%. It's not as dramatic as it looks because there was like this one-off benefit from income taxes in this quarter last year. That was like $70 million. So it makes the net income look way dramatically worse than it is. Like, it's 94% on face value. Dig a little deeper and it's like, okay, it's not that bad. Diluted EPS down 94%. So I gave them a D- grade for Cava. Still interested in the stock. It might not be one I end up getting into. By the way, Home Depot, I just thought I would show you guys this. This is Home Depot. They reported earnings this morning. I graded up their income statement, plugged it in the private group's Discord chat here. This goes to show you when your revenue goes down, it's tough, man. It's brutal. And what it can affect your profitability is so much bigger. So net sales for Home Depot was down 3.8%, but the issue was cost of sales only fell 3.5%. So you got revenue going down at a faster clip than cost of sales, and revenue is a much bigger line item, right? That's not going to mean good things for gross profits. Gross profit fell 4.4%. Now, the main issue on top of that is selling general administrative was up. You can't have your gross profit going down and sell SG&A going up. Depreciation and amortization up. So total operating expenses up for the company, which means your operating income is going to get wrecked. And so despite net sales being down only 3.8%, operating income down 14.4%, folks. Okay? This is why income statements, balance sheets, all those sorts of things are very, very important. Will I buy Cava stock? I would like to at some point in time, but it might end up being one I just don't get into over time, and that's fine. I love my cake. I think cake's a way better return profile, a way better risk reward than Cava for the next, I would say, 5 years, if not the next 10 years. Cava doesn't have an ATM machine of a business model. Cheesecake does, because the Cheesecake Factory concept makes so much money. But then Cheesecake has several growth concepts coming behind it. Flower Child being one, North Tally being another. If we can get management to get those Flower Childs out there in 27, 28, 29, look out, cake's going 100 plus. We could even be talking about 150. AMD.
Sue and a guest of the show. Lisa, first, I'm just going to offer you congratulations. This is a terrific deal, and I know that these kinds of things could never have happened without your hard work and the turn that you have engendered at AMD.
Well, first of all, Jim, great to be here. Thank you. It's a big day for AMD. We are super excited about this partnership, the expansion of our partnership with Meta. And it really is, another example of how the industry is investing big in AI infrastructure right now. And this is all about having the right technologies and the right partners, together building this, AI of the future.
I know you and Mark Zuckerberg talk a great deal. What do you think the game plan is for could be the super intelligence that we keep hearing? And what does it mean for the consumer? What does it mean for Meta? What does it mean for you?
Well, I think this is absolutely, first of all, Mark is a great partner, incredibly ambitious in what he wants to accomplish in the AI world. This is about super intelligence. This is about bringing all of the capabilities of AI to all applications around the world. And frankly, we want to make it's AI everywhere for everyone. That's our motto. And I think we very much, share that with Meta. And what we're doing here is really helping them build out their infrastructure. We're taking our technology and really optimizing it for Meta's most important AI workloads. And we're doing this over the next 5 years, over multiple generations. And so it allows us to, keep building upon that flywheel and getting a great product and great set of capabilities out at the end.
Okay, so Nvidia has a deal. They report tomorrow. We'll probably find out more details, but it's a big deal, billions of dollars. We know that not that long ago, Corning announced a very big deal. Neither of those deals involved Meta taking a share in them. Why is Meta taking a share in you?
Well, here's the thing that's important about AI infrastructure, Jim. We are at a time and a place where the industry is moving so fast, and it's about how do we accelerate the rate and pace of innovation. And that's exactly what our strategic relationship with Meta is all about. We've been working really well together. Our teams are very much, working on sort of the future. But we wanted to take a big step function increase in that engagement. And, that's the beauty of this agreement that we're talking about. It is actually a win for AMD, it's a win for Meta, and it's a win for our shareholders in the sense that we're deploying at huge scale. 6 gigawatts is an incredible amount of compute. We are agreeing to optimize hardware, software, and systems together, and we are optimizing specifically for the most important AI workloads going forward. So I view this as, really tying the company strategically. And when you think about, there are very few companies that can actually invest at the scale that we're talking about. It's a great partnership.
So let's say you have two products that are very comparable to each other, right? You have Nvidia's chip over here, you have AMD's chip over here, and let's say they're very comparable. Let's even say AMD's slightly behind, but not like there's not like a massive gap, but let's say it's even slightly behind, right? And you're one of these big companies and trying to figure out, do I want to spend a fortune of money with a company I have ownership in, right? And so that can likely help me get a great return on this. And that company's likely undercutting the other company's price. Or do I want to spend with the other company, which I don't have ownership in, and I have to pay likely a big premium? That's where we're talking. AMD's gotten very strategic and very intelligent here, right? And obviously Lisa Su's not going to put it out there like that, right? But as somebody like myself that has to dissect what's actually going on and why like they're actually doing these deals, because they're not going to say something like that on camera, obviously, right? But listen, we know AMD likes to undercut price of Nvidia, and if you're adding ownership, these companies are going to have ownership in AMD. It's freaking genius, because these companies are just going to be so incentivized to spend money with AMD. You'll likely end up getting a great return versus Nvidia, which you're going to have to pay a huge premium for, and you're not going to have ownership in. So you're just spending the money out there, and it's like, bye. I like it, man. I like what Lisa Su's up to here.
Lisa, I wanted to follow up on that particular area in terms of the warrants here. It's 160 million shares of AMD common structured to vest again at specific milestones associated with, as you write in the release, the GPU shipments and when they're achieved. You had a similar deal with OpenAI when you announced that. It was also 160 million. And some of your shareholders, a couple of them I spoke to this morning, said that's 20% of the company conceivably under warrant here. Why are you including these? You explained it to a certain extent, but the cynics would say, well, you have to because otherwise they're not going to buy your chips. How do you respond to that?
Oh, David, I would take a step back and say, look, we are sizing this AI accelerator market at, $1 trillion over the next 5 years. It's a huge, huge market. And we're actually at an inflection point where, I'm a big believer in there's no one size fits all. Frankly, you need a lot of different types of compute. AMD has all of the pieces. So we have CPUs, GPUs, we have the system infrastructure. And what we want to do is place bets on, who we think are going to be the winners in AI innovation going forward. So this is about strategic partnership. I think, everything that we do when we look at the structures of this is to ensure that it's a win-win. So everything is performance-based. There's a tremendous amount of revenue coming into AMD. Every gigawatt of compute is, double-digit billions of revenue to us. And then when you think about all of the ecosystem value in terms of increasing, and improving our hardware ecosystem, our software ecosystem, and it really accrues to every customer that uses AMD. So it is a special time, it's a special place, and it's an opportunity for us to supersize what was already a fantastic partnership.
Yeah, it is, it's brilliant. I really like the move, man. I really like the move. Okay, let's talk about SaaS apocalypse.
sharply to start the week again as AI.
Obviously, this was yesterday. This video is from yesterday, so it's going to be very interesting. It was horrible for the SaaS stocks. I wonder if yesterday was a bottom for SaaS. We'll see. We'll see. Like it's possible. We do have to admit it's possible that yesterday was the bottom for SaaS stocks, and they move up from here. But we'll see.
Disruption fears pummel the sector. Deirdre Bosa has more on the SaaS apocalypse in today's Tech Check. Did you coin that?
I think it was a Wall Street brokerage, but it came a few weeks ago. And look, we're still talking about it. We're probably going to talk about it for a while because some of the biggest names in software, they're gearing up to report this week. And the question for them is simple. Can any of them say something, anything to change the narrative here? Because right now, even winning is not enough. ServiceNow and Palantir have already reported, both showing real traction, yet investors, they aren't buying it. Look at the direction of their stock prices since reporting. And then there was another piece over the weekend from a popular investment.
To be fair, and here's where it differs from Salesforce in their report, is Palantir and ServiceNow. If you go back 6 months ago, okay, Palantir had an insane valuation on it, like ridiculous, trailing 12-month P, forward P, price to sales, forward price to sales. ServiceNow extremely elevated as well. Salesforce now is going in to their earnings with a forward P of 14. So I'm just saying, like, the bar is set way low for somebody like a Salesforce to come in and explode to the upside versus, like ServiceNow and Palantir, which had very, very high valuations. Now, those valuations on Palantir and ServiceNow have come down immensely, right? Especially ServiceNow. ServiceNow's PE's down to the low to mid 20s now on a forward P basis, which is way too low for that company. But, just that's something to kind of keep in mind for those companies and their earnings versus kind of what's going on here with Salesforce, which is next up.
Letter titled The 2028 Global Intelligence Crisis. It is adding more fuel to the fire. Now, this is a thought experiment that plays out what happens if AI works so well that it hollows out the white-collar economy. It's going viral because it puts a name on what the software sell-off is already pricing in. Now, this week may be software's biggest test yet. You've got
Ladies and gentlemen, let me just say, AI's got a long way to go. Let me show you what happened today. Laughable. I used, this was Super Grok, the most advanced Grok I was using. I said, make me a 900 square foot, 1-bedroom luxury casita, right? Do me a floor plan. And I'm like, this is a very simple task. Like, I could ask anybody watching this video right now to do this. And I think the far majority of you guys could do this. Like, do me a little floor plan, 900 square. This is not like rocket science, right? Look at how bad these services did this job, right? They have an entry foyer. Why would you have a foyer for a casita? That doesn't make any sense. And you open your door into another door? That doesn't make any sense. What are we doing here, right? Then, if this is a luxury casita, everything should be connected. You have to walk through a walk-in closet to then walk into your master bedroom, and your walk-in closet has a bathtub in it. You gotta be flipping my flapjacks. What are we doing here? Then you have to walk through your walk-in closet back out to then finally go into this bathroom over here. What? What the heck is this? Okay. No, I then used an investment of mine, Google McDougal. First off, I used Google Gemini the first time. Did such a bad job. It used like half the square footage for a flip and flapjack in master bedroom closet. It was ridiculous. So I gave it another chance. Okay. And look at how bad of a job Gemini did. A simple task. It makes the bedroom over here. Okay. It puts the master closet like in the middle between two walls. That doesn't make any sense, but okay. So we're doing that. Then it says master suite. This is a bathroom. It didn't even connect a master. This is supposed to be a luxury casita. It doesn't even have a connected bathroom. It sent the bathroom over here, right? Which doesn't make any dang sense. It's got sinks like crazy. Why would we have 3 sinks in here? What are we thinking? With this little teeny shower that's bundled in between sinks, then you got to go through another door just to get into your bathtub area. No one would ever design something this horrible, ever. Like a little kid would do better than this. Then, look at this. It puts this island here with another shower here. I guess we're going to have a shower over here on the island. And a sink that the only way you're going to be able to get to that sink is if you crawl on the countertop to get over to wash your hands. What are we doing here? Oh my gosh. Oh my gosh. It's so bad. Then it says this is a great master room right here. Really, this is a great master room. Then it doesn't even do this in like a 3D. It does it in some weird format. And like this doesn't even make sense. Then it has 10-foot sliding pocket doors, supposedly, that it has a couch backing up to. Who would ever put a bunch of stuff in front of you? Like the whole point of having sliding pocket doors is you want to have it like open so then you can go out to your patio and, whatever. It's just ridiculous. And then there's no TV, but maybe we'll put the TV behind the sink that you have to crawl to. Like, oh my gosh. It's so bad. It's so bad. And then what are you going to do? Sit in this chair? The looks of these chairs? Like, oh my gosh, guys. And this is a simple task. It's not like this is like some rocket science, like crazy thing. And so like simple stuff like that, I'm like, oh my gosh, it can't even do that yet. Like you would think with all this money that's been spent on AI from Google and from XAI and all these other companies, you think like something like that would be like easy. Like draw me up a 900 square foot casita, make it make sense. Like this should be easy. That's not like a super complicated thing. Anybody in their first year of like architecture school would be able to do that and like understand, okay, this needs to be roughly over here. This needs to be over here. This would make sense in this situation. Dude, what in the heck's going on? I saw this other video. This guy was using ChatGPT, and he asked ChatGPT, he said, the car wash is 100 meters away. I need to take my car to go to the car wash. Does it make more sense to walk or to take the car? And ChatGPT says, oh, it makes more sense to walk to the car wash because, it's just only 100 meters away. It'd be a nice stroll for you. And he's like, well, how am I going to wash the car if I walk? And then ChatGPT's like, oh, I see what you're saying. So, yeah, I would drive the car there. It's like, oh, do you think? Like, I think we should probably drive the car to the car wash. That might be smart, right? Like it was so ridiculous. So anyways, that's the thing with AI is I'm like, dude, we got a long way to go. Like the way you hear this hype and excitement and craziness on Wall Street, it makes it sound like, oh, Salesforce is going to be a relevant service now and Adobe and all these companies. And it's going to take over the whole world. And like humans, we're going to become extinct because the AI is going to do everything. And then you ask it to draw you up a casita and it can't even do it right. Like it makes mistake after mistake after mistake on such a simple task. And it's like, dude, we're a long way from the day when AI is going to take over the world and like we're not going to have jobs anymore. I'm like, dude, oh my gosh, it's a long way to go in this game.
Of course, on Wednesday,
which means a lot of AMD chips for many, many years.
For enterprise software, Snowflake the same day, and then Workday tomorrow night, the back office giant that has to answer whether HR and finance software survives when AI can automate those workflows directly. There's a chart circulating from Goldman Sachs that might explain why investors are nervous even when the numbers look fine. It shows.
Oh, this was peak fear yesterday. This is why I'm like, if yesterday was a bottom for SaaS, like I wouldn't be shocked. Because yesterday this was going on out there. They were comparing Mark Benioff's company and Salesforce and that incredible workforce over there and their incredible products and, tech leaders. They were comparing the newspaper industry. They were comparing ServiceNow and all these other great SaaS companies with their incredible workforces. They were comparing them to the newspaper industry. Oh my gosh. That's why I'm like, if yesterday was the bottom for SaaS stocks, I wouldn't be surprised. Because when you've gotten that low, when fear has ramped up that much that you're comparing these companies to the newspaper industry, I don't know what's below that. Like that's got to be the lowest of the low blows you could ever receive. Newspaper industry?
Paper stocks from 2002 to 2009. As they fell, earnings held up and the business looked okay until all of a sudden it was not. Now the market saw internet disruption coming and priced it in years before the P&L confirmed it. So the worry is that software is in the same pattern right now. Earnings, they're still holding. We may see that this week, but the stocks are in free fall and the market maybe pricing in a world where AI agents are doing the work that software was built to help humans do. And guys, that is now what's hitting those cybersecurity stocks. Not that anyone is replacing CrowdStrike in a single prompt, as George Kurtz posted about, but when agents can write and they can deploy code, they can also scan and patch it. Companies reporting this week, they're going to have to show that they're not the thing being disrupted. Rather, they're the thing.
Yeah, I'm sure AI can do all these things when it can't even draw me a one-bedroom casita that makes sense. Yeah, I'm sure it's going to be like brilliant and it can just like, find all cybersecurity threats, and just like write all the code and fix all the code. I'm sure it's just, I'm sure it can just do everything. It can't even properly design a one-bedroom casita, but I'm sure it's like could do everything else. That's the one thing. It can't even like figure out like why it makes sense to drive a car to the car wash instead of walking to a car wash when your car's not even there. But I'm sure it's just like brilliant at doing everything else in the world. Like, come on.
Doing the disruption, and that is a difficult thing to do in this environment, guys.
Yeah, I love that element about the delay, the lag, because B of A last week had a chart of Blockbuster and Netflix. When Netflix came around, it took 8 years for Blockbuster to essentially go away. And as for that Substack you mentioned, the Citrini research piece, which is now making the rounds, I mean, their argument, D, is that software is the opening act, and the same calculus that would push a ServiceNow to cut headcount could apply to any company with a white-collar workforce.
Right, and then you think about security, cybersecurity, and this has been talked about as one of the most difficult industries to disrupt. You could also talk about legal and healthcare. There's really zero tolerance in these industries, and what a lot of folks are saying is that they are not going to be replaced tomorrow. That is absolutely true, but I mean, it's getting easier to envision a future like this Citrini note does, in which the technology gets better, right? Like right now, the technology is the worst it's going to be. So you're not going to create something with one prompt, but a year from now, 6 months from now, can you recreate a prototype in a few prompts, 100 prompts? I mean, that's where this starts to get really complicated, and that is what the market is pricing in.
Yes, but you use the newspaper.
The other issue that they're making a huge mistake on here, is they're comparing. This is like very entry level business stuff. It disappoints me when I hear such bad analysis that I'm like, these people are missing like very early, like you go to university and learn about business stuff. Okay, they're comparing B2C business models to B2B business models. They are not the same. You learn that very early on in business school, okay? When we're talking about a B2B experience and we talk about a organization with 80,000 employees, 50,000 employees, 20,000 employees, right? Switching out entire software platforms and these sorts of things, that's an incredibly daunting task. And to then have your workforce trained on something else that might have bugs in it and a bunch of mistakes to potentially save costs when it's going to end up likely costing you a bunch more money. Because the money you pay to these companies is actually a very small percentage of your revenue, right? So for B2B companies I know I know businesses that, would be on such outdated platforms just because the switching costs would be so insane, right? And those like outdated platforms. Never mind ones that are forward-looking like Salesforce and ServiceNow and these other companies that are adopting, great AI agents and those sorts of things, right? And they have huge ways to make money. And by the way, the LLM providers and all those companies, they need Salesforce, ServiceNow, all those companies. They want to make a fortune off Salesforce, and Salesforce is going to make a fortune off of selling this to their customers because they have all the data. And the data is where the magic is. You can't make these decisions unless you have the data, right? If you just learn a little bit about these business models, you start to put pieces together like, oh, shoot, these companies are actually very necessary. You can't go around them. I guess it's not possible, right? So, and you're comparing the B2C to B2B, and it's like, you can't do that. Newspaper was B2C, right? And as more and more people got the internet, they decided they didn't need newspapers. It's a very easy decision for an average Joe to make and say, I'm going to cancel my newspaper because I'm, reading stuff on the internet now, right? People switching from flip phones into iPhone. Easy. It's a B2C decision. I don't need my next phone to be a flip phone. It's going to be an iPhone. B2C, things switch fast, very, very quickly. B2B, oh gosh. that's like, we're talking decades of switch, right? And then when your companies that you have new growing services and products like ServiceNow does, Salesforce, and these other companies, there's a world of opportunity for you. Never mind the switch being ridiculous. So, that needs to be accounted for. And that's, just bad analysis by so many individuals. And it makes me think, I'm like, do people even understand base level business? Like, I really think about that. And I'm like, do they even understand like base level? This isn't like super complicated matters, base level. And then I'm looking at like this AI and I can't even draw me a 1-bedroom casita. Crazy. What's going on out there? Flipping flapjacks?
Right? You said that was the parallel. I mean, look at the New York Times. Pull up a long-term chart of that stock. That would have been a huge buy when it was, $6 a share, and is now trading at a record. So there are potential winners here for those that figure it out.
Here's what I would ask, though. Is the New York Times still a newspaper company? Like, absolutely not, right? It made sure that it wasn't the thing that was being disrupted. It became sort of the disruption, right? Has all this other revenue from gaming and recipes and all these other, revenue streams. And that's what, for example, like a Figma is doing, right? I spoke to Dylan Field last week, and he said he did a partnership with Claude Code, right? He's kind of like welcoming the wolves into the den, but investors like that. And, Figma is going to be disrupted in some way, but it's also sort of on the disrupting side by partnering with an Anthropic and Claude Code that is behind everything.
It's the companies that can figure out how to do that in the software space that'll look like great buys right now. But in the meantime, it's just a sell.
Of course, and it's a sell. Oh gosh, and this is Tech 101. This is what happens in the tech industry. You have to reinvent yourself all the time, right? You're going to have a great 5, 10, 15-year roadmap, and then eventually something happens. You have to reinvent the wheel and come out with new products and services and adapt to the market. Companies went through this back when we were moving to the cloud, and they had to change their business models from being a one-time fee into more of a subscription-based business model, right? And there was a lot of fear at that time around cloud computing costs. And oh my gosh, these companies like Adobe and Microsoft and a bunch of them, there's a bunch of worries about they're going to have to spend a fortune on cloud, and they're not going to be able to get that back from their customers because cloud was so expensive at that particular time, right? And instead of getting an upfront big amount, they're getting like a small fee per month, which is going to take them a long time to kind of generate that back. And there's a bunch of worries about that. And guess what? Microsoft stock went up a ton since the cloud revolution started, and so did Adobe and a bunch of other stocks, right? And so great companies do what great companies do. They adapt, they switch, they make adjustments, and then that thing that was disrupting them ends up being a great new avenue for them to grow their businesses, right? And weak companies, you know what happens to them? They get thrown on the side. But that's just what happens. The weak are the weak, and they're forgotten about, and the strong grow, right? Like, that's just how it is. And so, anyways, that's story for the day. Pin comment down there if you want access to all my premium courses, access to the private Discord chat, exclusive weekly videos from me, see the moves I'm making in my big dog portfolio, the public account. You want to join with the 6, 7, 8-figure members, all that good stuff. Pin comment down there, click on that, fill out a form, see if we can get you in the private group and get you up to a much higher level than where you're at right now, so you don't think about these subjects the way some of these individuals think about these subjects, okay? And let me just tell you, certain time periods in the stock market, it's going to give you incredible opportunities, but it's going to test you. And it says, if you want this opportunity, you better be brave financially, because it is not going to make it easy on you. And I'm seeing the market go through one of those time periods right now. I'm looking at the public account. Public account seems to take 1 step forward and 2 steps back over the last several months now at this point in time, right? Ever since it hit its all-time high, way back in sometime around Halloween, right? Takes 1 step forward, 2 steps back. And that seems like what's going on out there. We're looking at the market here today. Dow down big, nearly 1,000 points. NASDAQ down pretty big. IBM getting slaughtered today. I recently saw it was down 13%. Anthropic's programming language threats. Everything's being threatened by AI right now. Everybody's running to conclusions. I posted this on X here today. I said, I just vibe coded Amazon. They're irrelevant now. Use my vibe code, baby. And we're going to do everything through my vibe code. I'm Jeremy Bezos now at this point in time, baby. We're rocking, okay? That's a sentiment we have out there. By the way, if you ever want to follow me on X, I always have it linked in the description area of all my videos. Looking at the public account positions here today, some of them at least, obviously the TSLZ are moving up quite dramatically here today. But PayPal, look at this. This is the only way we can get PayPal to go up. Everything else in the market has to crash. If we can just get the Dow to go down 1,000 points a day, I think PayPal can eventually go to $80 or $100 a share. It's unbelievable, right? And look at stocks like Cake, stocks like Celsius, stocks like Estee Lauder. Those stocks are holding incredibly strong despite everything going on out there. And it's a lot, right? It hurts out there. S&P 500 down 2%. People are like, oh my gosh, like market's hardly down 2-3% from all-time highs. But look at the damage. Microsoft, Mr. Softy, usually known as one of the safest stocks in the market, down 30% from all-time highs. Palo Alto Networks down 36%. CrowdStrike down 38%. Palantir down 38%. AppLovin down 50%. Salesforce, usually seen as one of the safest companies in the entire stock market, down 52% from its all-time high. Been overcut in half. Intuit, another one of usually the safest business models to invest in the market, down 57% from all-time highs. ServiceNow is down nearly 60% now. Oracle's down over 60%. Adobe used to be seen as one of the safest business models in the world as of just 2 or 3 years ago, and now the stock has fallen 65% from its all-time high. The damage out there is incredible. Meanwhile, Bitcoin and Ethereum continue to be incredibly weak. Usually something you want to look at if you want to know if the market's going risk on or risk off. Look at the weakness, ladies and gentlemen. Bitcoin 64,000, trying to hold. It might go 63, and you know, it bounced off that 60,000 level. What is that, a few weeks ago now at this point in time? If we see it break that and it goes into the 50s, look out below, right? Ethereum, that baby might not bottom till it's under 1,000. The Bitcoin cycle, I brought this up several times over the past few months here. I think it's important, right? We got something that really trades off of technicals in a major way. Bitcoin doesn't have fundamentals the same way a stock does when it comes to earnings and revenues and all those sorts of things, right? Margins. Bitcoin runs heavily on technicals, and this baby is not supposed to bottom until the fourth quarter of this year. That's a long time from now. And the bottom is supposedly supposed to be 30,000 or below. Somewhere between 20,000 and 30,000. Keep in mind, Bitcoin cycle could always be wrong, but a lot of people say it's very accurate. So just keep this in mind, ladies and gentlemen, in regards to those assets there. Look at something like Hims. Hims has lost another nearly half of its value just in the past month. This stock used to be $70-something stock. It's $15 here today. The brutality, right? Micro Tragedy was 400 plus last summer. It's down to $123. Robinhood was around 150 back in the fall time. That baby's down to 71. It's been overcut in half. Coinbase has been way overcut in half. That was 400 plus last summer. It's now $159. SoFi hasn't been hit as far as some of these other stocks, but still, SoFi is all the way down to $18 a share now at this point in time. Little Dingo, Duolingo, brutal, man. This stock was $500 plus 9 months ago. We're talking a baby. It's $106 here today from 500 plus 9 months ago. Do the math on that. Okay, 3 core subjects we're going to speak about here today in this one, okay? One is, when am I going to plan on cutting these Tesla hedges loose, okay? They're starting to appreciate. When am I going to cut them loose and go ahead and move that money, and where am I going to move that money into, okay? Second subject up here, PayPal. It's been a horrible stock, right? We all know that. It's been dead money the last few years. There might be a big, quick money-making opportunity here. I'll speak about that, take you through what's going on there, and if certain things work out, it could be a lot of money made over the next 6 to 9 months. But I'll run you through kind of what's going on there and the risk involved, because obviously none of these things are a guarantee, okay? Third subject we're going to get into here today is, could this market downtrend all the way to Q4, right? Which would basically be in line with where Bitcoin is supposed to go over the next, we can call it 6-7 months here now at this point in time. Okay, so we'll get into all that in this video here today. One thing only I need from you guys, if you haven't already done so, if you could please just smash that like button, hit that little thumbs up button for me. That would mean the world. Thank you to everybody that's already done it. And additionally, make sure you subscribe to the channel. If you're not subscribed, make sure you're subscribed. I think we're close to 920,000 subscribers now on the channel, which is insane. If you ever told me I'd have 920,000 subscribers, I'd be like, what? You gotta be flipping my flapjacks. No way, Jose, but here we are, right? Okay, ladies and gentlemen, listen, I just gotta mention something about AMD. Here we are in a moment where the stock market's running these conclusions. AI is gonna take over everything, right? It's all gonna make SaaS irrelevant. It's gonna make everything irrelevant. Everything's irrelevant. It's just AI everything, right? It's gonna eliminate everybody's jobs and I don't know, whatever, okay? So here we are at this moment where the market's running that conclusion, and AMD's under 200. Make it make sense. It doesn't make any sense. And that's why I say the market just runs these conclusions. It's crazy. Because if you were really running that conclusion, you know how many AMD chips are going to be needed over the next few years? You know how many Nvidia chips are going to be? Like if AI is really taking over the whole game, oh my gosh, AMD should be 1,000 right now. Nvidia should be 1,000 right now, not under 200. That's just silly, okay? Crazy. Okay, so Tesla hedges. When am I going to cut those Buyback loose? So, as far as the Tesla hedges in the public count, they've done decent, but they haven't done that great as of yet. So one of the hedges, it's up like about $5,000. The other hedge is up like $3,100. I don't know why. I think one was cash, one was margin, so it like split them or whatever, right? Keep in mind, I do not invest on margin in the public account. There's a lot of risk that comes to that, okay? I could margin up to $3-something million if I wanted to. Obviously, I have no interest in doing that. I don't want to have to deal with margin calls. The market goes crazy, blah, 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 right? But anyways, so when am I going to cut these babies loose? Here's kind of what I'm thinking. I'm planning on cutting half those loose and taking the profits if and when the Qs go down 7+% from all-time highs. We're not far from that. Right now, the Qs are down about 5.5% from all-time highs. So once we reach that, I'm ready to go there. Now, you might think I'm waiting on something specific to happen with Tesla. Not really. This Tesla hedge is really around a market move down, right? Like Tesla's a great hedge against it because it trades at such an insane valuation. So if the market goes risk off, usually Tesla gets hit a lot heavier, right? So look at a day like today. A day like today, the NASDAQ's down, 1.2% or something like that, or the Qs are down that much, right? And check out how much Tesla's down. So Tesla's down 3% today, and the Qs are down, I think I have the Qs somewhere here. There's the Qs. The Qs are down 1.2%. Tesla's down, 3%. So Tesla's down over a double up of what the Qs is down, right? So that's why I'm really betting against Tesla. It sells off way harder in a market downtrend than the NASDAQ does, and the S&P 500 does, or something like that, right? And so that's why it's really around a market move down hedge, and not like, it's just like me basing upon, Tesla's fundamentals or something like that. Because we know Tesla trades at crazy P ratios and all sorts of things, right? We don't need to go into that. It's really around a market move. And my opinion is I'll sell the rest if and when we see the Qs go down 10% plus. That will be the moment I'll say, you know what, I'm done with this. No, that doesn't mean the market bottoms exactly there. It could go down more. I'm not worried about trying to get it at the perfect time, right? Now, there is a potential Tesla continues to downtrend regardless of the market over the next 6 to 9 months. And the reason being is if they end up doing the SpaceX IPO, I think that's going to bring a lot of capital out of Tesla stock and actually, major selling pressure, because people are going to want to buy SpaceX, because then that's going to be the new most exciting company in the world, right? Oh my gosh, we're going to outer space and doing all these things, right? And Starlink and all that stuff. So that's kind of what I'm up to there. So the bottom line is, let's say the Qs go down 5% for the rest of this week, which probably isn't happening, but let's say that happens. I'll probably cash all my Tesla this week when it comes to Tesla hedge. And then where am I going to move that money into? I'll show you exactly where I'm going to move that money into. I would then have proceeds well over $100,000, right? I would move that money into SaaS stocks. Talking Salesforce, CRM, I'm talking Adobe, I'm talking ServiceNow. These stocks I've always felt like probably bottom at some point in Q1. And that's why I've been trying to build out my positions rapidly. If you see what I'm buying, and what I'm buying heavy so far in Q1, what is it? It's SaaS stocks. Because I truly believe these stocks likely bottom in Q1. I could be wrong about that. Maybe they never bottom. Maybe their business model is just going to be completely eroded over the next few years by AI, and they're going to become completely irrelevant. I do not believe that's the case whatsoever. I think the market has this wrong by a mile. I think absolutely there's certain business models that are going to be, irrelevant 3 years out, 5 years out from now that, AI will replace. But I do not believe that's Salesforce. I do not believe that's ServiceNow. I do not believe that it's Adobe. And the more you're in the real world, the more you realize you can't just replace these companies. It doesn't work like that. I mean, somebody I work very closely with, Andre, he gave me a great example just a few days ago over the weekend. He was just trying to have AI, I think he was using ChatGPT, latest model. He was just trying to have it do like a simple illustration for him on something he kind of wrote on paper. And it wouldn't do it because he wrote CNBC on the graphic. And since he had wrote CNBC, it basically thought this was something that was taken from CNBC, which it wasn't. It was his complete original thing. He just put CNBC on it because it was relevant to, listening to CNBC and those sorts of things versus actually doing research. And it couldn't even do it. So what did he have to do? He had to go to Photoshop, Adobe product, and actually do it himself, right? And this is just like something we find time and time again of you want AI to do something and it just doesn't do it because of this problem or that problem, or it just doesn't do it to a high level and you're like, it needed to look better. And it ends up being more of a pain to actually you could finish in Photoshop in less than 5 minutes and do it the exact way you want, or you can mess around with the chatbot for 20 minutes and it still isn't the way you want it. And it screws up again and again and again. And it's like, come on, man. No, there's thoughts that eventually these things are going to get so good that you won't need Adobe or something like that at all, right? And we'll see about that. But it's not there. It's just not there. So could that happen? Sure, that could always happen, but it's not there today, right? So that's my opinion kind of on these sorts of stocks. And the other reason is usually when you're going through a stage in the market where a whole sector, a whole industry is just being wrecked. And when I say wrecked, I'm totally talking about the stock prices because the business models look great. They look better than they've ever been. Just go through the numbers. Almost all these companies have reported now, their numbers are amazing. And if anything, they're guiding higher, right? Great guidance is amazing. But the stock market is freaking out over all of these stocks, right? So what you need to have is stupid pricing on stocks to really get them to bottom, right? Remember Meta bottoming under $100 a share was stupid. It was crazy, right? Remember Nvidia back in 2022? Remember Shopify went down to $25? Remember how low Netflix went in that crash in 2022? You just got to stupid pricing. And that's what needs to happen. And guess what? It has now happened in regards to these SaaS stocks, and that's why I think they're close to a bottom here. Salesforce is now trading at a forward P under 14 with double-digit revenue growth and strong double-digit EPS growth. We have Adobe trading at a forward P of 10 with very strong earnings per share growth of double digits, and we can call it revenue growth of high single digits, maybe low double digits, right? ServiceNow is down to a forward P of 24 with a company that's growing revenues and earnings per share at around a 20% clip, right? This is getting to stupid pricing on Salesforce, Adobe, ServiceNow, these sorts of stocks, right? It's just ridiculous. But that's where we're at. That's where we're at, right? And so that's why I feel Q1 is likely the bottom for these particular stocks, right? Now, it's important to understand what's going on here. When you're trying to think about these SaaS stocks and how do they play with these LLM models and all these sorts of things, right? I said LLM companies need SaaS companies, and LLM companies will make a lot of money off SaaS companies, right? And says you hit the exact tension that's defining the tech market in early 2026. What you're describing is often the LLM tax of the software world, right? The relationship is both symbiotic and parasitic. As of February 2026, here's a reality of how this revenue extraction is playing out between LLM providers, OpenAI, Anthropic, Google, and SaaS giants like Salesforce, ServiceNow, and Microsoft. Why LLMs need SaaS, the distribution moat. LLM companies have the brains, but SaaS companies have the context and the workflow, the data wall. An LLM is only good if it sees the data, right? As it sees the data, it has to see the data. So if Salesforce has all the data inside a company's, sales department, you need that. You can't just go around that. That's what's needed in reference to then start to use an LLM model, right? Salesforce has 20 years of customer history. ServiceNow has every IT ticket your company ever filed. Without that proprietary data, an LLM is just a smart person in a dark room. Very well put. Very well put. The workflow habit. People don't want to go to ChatGPT to do work. They want to stay in the app they already use. LLM companies need SaaS companies to be the delivery vehicle for their intelligence. How LLM companies make money off SaaS, the toll booth. This is where the money-making part of the point comes in. LLM providers have essentially turned themselves into digital utilities like the electric company. The AIP, every time A user asks an AI agent in SaaS app to summarize this meeting, draft this email. That SaaS company pays a fraction of a cent in tokens to the LLM provider. The margin squeeze. Take a company like Google, customer service SaaS. They might charge a client $1 for an automated, or that wasn't Google, by the way, it was Gorgias, right? So Gorgias. They might charge a client $1 for an automated AI interaction, but they have to pay roughly 22 cents of that directly to the LLM provider for the compute. Scale. OpenAI hit an estimated $20 billion in annual recurring revenue in late 2025, and a massive chunk of that isn't from selling $20 a month subscriptions. It's from thousands of SaaS companies plugged in to their API. How SaaS companies are planning to fight back. Usage-based pricing. SaaS companies are stopping per user fees and charging per task to ensure they can pass the LLM cost on to the customer. Companies like Salesforce and ServiceNow are training their own tiny LLMs to stop paying OpenAI for every task. Some SaaS companies are now charging the LLM providers to access their data for training, trying to turn the tax around. Very interesting, right? So, LLM companies are the new landlords of the internet. They're extracting a massive percentage of the value that SaaS companies used to keep for themselves. Debatable because we have new tasks happening, right? In 2026, the question isn't whether LLMs will make money off SaaS, it's whether they'll be able to make any profit left, or there will be any profit left for SaaS companies once the landlord takes his cut. And a spoiler alert, there's going to be plenty of profit. There's going to be plenty of profit in the end, right? The big Benioff. The big Benioff. You know anything about Mark Benioff? Let me tell you this, okay? The big Benioff always finds his way to get his cut. Okay, you think the big Benioff is just going to be like, oh, Mr. Altman, okay, you get all the money. I won't leave. I won't. Come on, man. The big Benioff, he's going to make a fortune off of this in the end. Are you kidding me? This whole AI wave? McDermott, all these guys? Oh, gosh. Oh, man. They must be watching their stock prices go down and just laughing. Just laughing because they know they got it on lock and like people just don't get it yet, right? But they'll get it. It happens all the time in the stock market, right? Salesforce Agentforce platform has experienced a rapid adoption with annual recurring revenue surpassing $540 million in Q3 of fiscal 2026, marking a 330% year-over-year increase. Combined with Data Cloud, these AI-driven tools reach nearly $1.4 billion in annual recurring revenue. The platform is driving significant growth with over 9,500 paid deals. Agentforce is central to Salesforce's goal of reaching over $60 billion of revenue in 2030. Listen, ladies and gentlemen, just 2.5 months ago, we heard from Salesforce. And by the way, we're going to hear from Salesforce again here in a couple weeks, okay? You know what happened with Salesforce? They raised their forecast. They didn't take their forecast down. They raised their forecast as Agentforce sales topped $500 million, okay? So, we have a situation here where Benioff's going to make a fortune off of this in the end, but the market doesn't get it yet, right? And a lot of other companies are going to make a fortune off of it. The market doesn't get it yet. They don't understand exactly how this is all going to work. They think like the LLMs are going to take all the money or something like that. No. The SaaS companies are going to make a fortune in the end in regards to this game, right? So keep this in mind, right? I woke up today. You know, everything's pretty much the same around here. The neighbor's still shooting on next year's deer. Listen, you know what I did? All the same stuff I've been doing. You know, if I want to watch something, I go to YouTube. If I want to go to my private group and be in the Discord chat, right, I go to Discord. If I want to go on X, I go on X. If I want to just pull up my massive amounts of Watchlist, I go to TradingView, which should soon be done on 1000X, by the way. Hint. When I did all my research in regards to companies and valuations and conference calls and all that stuff, today I used, guess what, 1000xstocks.com, right? If I wanted to communicate with the individuals in my small businesses, we go to Slack to talk about things, right? Loom is where I record videos, right? All the same softwares. I'm not vibe coding YouTube. I'm not vibe coding X. I'm not vibe coding Discord or TradingView or 1000X or Slack or Loom, right? All these softwares I use day in and day out, and they're not just being replaced. It's not happening, right? And AI is not new. It's been around for years now at this point in time, right? And so this is like, I have no interest in vibe coding away Slack to try to save some money so we can have a service that's way worse with a bunch of bugs. Just not interested. I'm not interested in vibe coding like some sort of Discord replacement so I can have my private stock group members be in some vibe coded thing instead of Discord. No, like this is just ridiculous, man. Just ridiculous. You know, the things I do on 1000X, it would take me forever to do all this stuff through LLMs. Oh my gosh, and it wouldn't even be done right. It would be a mess versus just use 1000X and it's so simple and so easy to just do all my stuff. And so, you know, sometimes you got to ask yourself in the real world, like, what are you actually doing? Right. And so I use AI. I use Google Gemini every single day, pretty much. Right. Like that's a natural workflow. But in terms of, oh yeah, it's going to replace everything and we're just going to use all this stuff. And like, come on, man. Like it's ridiculous. Right. And so the stock market has, you know, there's a long-term truth in regards to, like there was one of the most ridiculous things I heard today. Okay. I had CNBC on in the background while I was working. And you know what they said? This guy goes on there. You know what he says? He compared these SaaS companies, some of the greatest business models we've ever seen. He compared them to newspapers, the newspaper business models of like, you know, 2002 through 2009. And all the newspaper business model looked fine. I'm like, what are you talking about? You're comparing newspapers to some of the greatest CEOs and companies we've ever seen in history? With their insanely talented workforces, like it's just ridiculous. But that's what we have going on right now. Like, okay, yeah, Salesforce is a newspaper, ServiceNow is a newspaper, Adobe's a newspaper. Like, it's just, come on, man. Like we've gotten to the silliest stage. And what I said in this, what happens in the silliest stage is you have valuations on these companies go to the silliest levels, where you're just throwing out anything, and people are like, yeah, oh yeah, they're the newspaper, yeah. Aye, Captain. So you have the long-term truth versus short-term delusions in the market, right? And the market goes through these time periods of very intense short-term anxiety, huge short-term anxiety the market goes through. Sometimes it's for the entire stock market. Sometimes it's for particular sectors, particular industries, right? And we have one of those time periods going right now, right? And you, as an individual investor, you've got to stay focused on the long term, right? And you've got to be able to decipher. Run numbers on companies, run projections, think about these business models, run the SWOT analysis, think about the strengths, opportunities, weaknesses, and threats of companies, right? And be able to run all that and kind of figure out in your brain, okay, does this make sense? Or is this being ridiculous? Am I getting this stock at a very attractive valuation or am I not, right? And then you have to put your chips on the table and say, you know what? I think I got a pretty good hand here. I loved learning about how to play poker. I live in Vegas, and so many years ago, I was like, I just want to learn how to play on a high level. I'm still trash, by the way. You could easily take my money if you're good at poker, so just so you're aware. But I actually took courses and everything like that to try to learn how to play poker. By the way, you need to spend 10 hours a day down there playing cards constantly to actually get great at the game, right? It's so time consuming, it's ridiculous, all for $800. It's insane. But anyways, I learned how to play the game on a high level, right? In terms of how you think about the game, right? And at the end of the day, dude, you're holding a strong flush. You got to put the chips on the table. And you gotta say, okay, does this make sense? How did this guy play his hand? You know what? I got a strong flush here. Yeah, could I get beat by something else? I could, but does that make sense to get beat by something else? A straight flush or a royal flush? Probably not. You know what? I think I'm going to go ahead and I think I'm going to, bet this hand strongly, right? And sometimes you might be wrong. And, you might get beat out. And you had an extremely strong hand. And you played it right. But somehow you still got beat in the end. And you got to be willing to take that risk. It's the cost of doing business, right? And so for all my individuals out there that are long-term thinkers, just focus on the long term. The short term will be what the short term is going to be. The delusions, the market freaks out all the time. Whole market goes down, whole sector goes down, whole industry goes down, right? And then months tick on, years tick on, and then people realize, you know what? Maybe we went a little too crazy there. I was maybe a little bit silly, right? If you're a long-term focused individual and you've got $100,000 plus net worth, feel free to apply to join private group. That will be the pinned comment down there. We have we have 3,000 plus members in there. So many folks that have multi-6 figures, multi-7 figures, and even 8-figure investors in there, right? You get to be in there with myself, exclusive weekly videos, access to all my course curriculums so you can learn everything I got up here so you don't feel like you're gambling the market. You feel much more confident when you go to make decisions, access to 1000xstocks.com, all that good stuff. That will be the pinned comment down there to take you up to a higher level than where you're at. Okay, next up here, PayPal. Okay, big potential quick money making opportunity here. Okay, so what's going on here? Well, PayPal is today's top S&P 500 stock. Man, that might be the first time I ever heard that headline. Holy smokes, this ain't no dang jokers. PayPal's today's top, I gotta say it one more time. PayPal is today's top S&P 500 stock. Oh my gosh, like this, you might never hear that again. Oh gosh. Okay, so what's going on here? Well, PayPal stock was up significantly today because of takeover interest. At least one large rival is interested in the whole company, while others are interested in certain assets, Bloomberg reported, citing people familiar with the matter. Okay, so we have a potential here, reports, that PayPal is looking, I don't want to say PayPal's looking, there's reports that PayPal is being approached to sell the whole company, okay? Or potentially sell certain assets inside the company. Like maybe it's Braintree, maybe it's some other asset they have. They have a bunch of other assets they own, right? We know PayPal and Venmo are the core of the company. So I could see, a lot of people being interested in PayPal. You have one of the best business models in the world, right? Not in terms of growth. PayPal's growth is very little. But in terms of just an absolute money printer of a business, that's PayPal. You have two great services that are used by hundreds of millions of people, right? Between PayPal and Venmo. You have the Braintree side of the business. You have an extremely low P ratio here. The forward P on PayPal is like 7. And you got a very strong balance sheet and you got a great income statement. And you got a company that's just buying back shares left and right? And it's just a money printer. And so I can definitely see many people being interested in buying PayPal, the company, right? So if this sale happens, what price am I thinking? My opinion is if the company sells the whole company to somebody else, whoever that suitor is, right? I think it will sell between $75 and $100 a share. The stock today, even after today's big move, is $44 a share. So if this happens this year and we hear an announcement that PayPal is going to sell to blah, blah, blah company, I think it happens somewhere in that price range, right? Now you might say, well, why didn't they do it before? Because before PayPal was like a $60-something stock. So to come in with a price at $75 or $100, it's not that big of a premium that the shareholders would likely have gone to it. Now that PayPal's gone to the 40s, now if you come in with a $75 bid, an $80 bid, an $85 bid, suddenly shareholders are like, shoot, that's like a double up from here. You know what? We'll go ahead and take that. We'll vote on that, right? Now, at this particular price, I would put PayPal's forward P somewhere between probably about 11 and 16, which I think is a very fair valuation considering PayPal's assets. So what would happen to the public count here is my position would then be worth somewhere between $225,000 and $300,000. Now, the moment a potential buyout happens, the stock would blast higher. Like let's say company XYZ also announces, and I don't mean literally company XYZ, I just mean some company because I think there is a company named XYZ now, right? But let's say a company says, okay, we're buying PayPal $77 a share. Stock explodes higher the next day to $70 a share, right? I'm out. I'm gone. I'm out, baby. That's what I would do with that. Okay. I won't worry about the other $7 a share. Everybody else can worry about that. I don't want to have to worry about the government looking in and like, or should we approve this or not, or any of that other BS. Like they all of a sudden get an announcement, $85 a share, we're selling the company, and the stock goes to 75. I'm out. I'm good. Okay. I'm moving that money elsewhere if that were to happen. Right. And do I think it's a realistic possibility? I do think it's a very realistic possibility. It also kind of makes sense. I saw the CEO compensation package. If you dive deep into the CEO compensation package, it also kind of makes sense that, and it seemed like he's the type of guy you would put there to try to do a deal like this. Like I just looked at it. I'm like, it seems like they would put a CEO like that in place if you were going to try to sell assets inside the company or maybe the entire company, right? So it looks like, based upon how I read through his compensation package, I think he would be very incentivized to sell this company for around $80 a share or so. That's just based upon what I read in the compensation package. It looks to me, reading through this as somebody who's been in the market 17 years, it looks like he'd be highly incentivized to try to sell the company for $80 a share or so. Right? Can't bank on these things. Maybe it doesn't happen, right? But I do also think it's very interesting. Did you see the options move in regards to, like, you got to keep an eye on other things outside of just a stock price move, because stock price moves up 5% today. But look what was going on in the options market, right? Because if you're thinking about a buyout comes, Buyout announcement would probably come in the next 3 to 5 months if it happens, right? And so, but the buyout probably wouldn't go through until late 2026 or maybe even 2027. But I was looking at some of these call option contracts that are kind of like a little later out, right? These are September 18th call options, 4250s, which is right, kind of where the stock is roughly trading at, in the, kind of between what it closed at on Friday versus where it's at today on Monday, right? And look at look at how much they're willing to pay. They bid that up almost 30% here today, right? And look at like 6250s way out of the money and 65s. Look at those strikes. Those are up 32% and 41% here today, right? People are only going to do that if they're pretty confident there's a buyout coming here, right? And there's something going on there. Now, also take a peek at these, right? By the way, who else is taking you inside option contracts here and showing you this sort of stuff like this, right? Look at this, July 17, 2026's, right? Look at some of the moves today. Remember, the stock moved 5%. Look at some of these moves here. The 45 strikes were up 35% today. The 47.50s were up 36%. The $50 strikes were up 47%, almost 50% today, right? That's a crazy big move. Look at the 52.50s, 33% move. 55s were up about 30% here today. That's investors saying we think based upon the CEO's compensation package, based upon the individual they picked to take over this role, based upon what the chatter we're hearing, and based upon it makes sense for somebody to buy PayPal, they're feeling like a buyout's coming this year, right? It's just a question of when it would be announced, right? So very interesting, very, very interesting to see what's happening there in the options market and with the stock overall. So would I be shocked if PayPal gets bought out this year? Not at all. It's just, the thing is, if it doesn't happen, it's not like a death blow to the company. The company's an ATM machine. It's going to remain an ATM machine for years to go in the future. And so, yeah, it has lame growth, but by the way, I'm wearing my red 1000X hat due to the red market, right? But man, obviously, it's a money printer. Okay, now, could this market downtrend all the way to Q4 of this year? Well, it's possible, but we really need more black swans. We need more black swans that come out of nowhere and like this big thing happens negative and this big thing happens negative, right? And so I don't think it's the most realistic, but it's possible, but you need more black swans. You need like this next big thing to happen. And it's like, oh my gosh, whoa, we weren't expecting this. And then another big thing happens. They're like, whoa, we weren't expecting this, right? In order to get this market to actually downtrend all the way to Q4. So I don't think it's super realistic. And here's why, basically. I think SaaS bottoms in the next 30 trading days. I think SaaS is a dominant subject in the market. And I feel like there's no confidence in the market until we get a bottom in SaaS stocks. Until we get a bottom in those SaaS stocks, I feel like there just can't be any confidence out there. People are just going to doubt every rally and they're going to believe every sell-off. That's what's going to happen, okay? So my opinion is SaaS bottoms in the next 30 trading days. The specific day, I don't know, okay? Is it today? Is it tomorrow? Is it next week? Is it next month? I don't know, but I think it happens in the next 30 trading days as SaaS bottoms, okay? Now, additionally, here's the deal. We're already trading very attractive in regards to the biggest stocks that really run the market. So if you're thinking about this market just plummets all the way to Q4, it's tough. Here's why. Nvidia, 26 forward P. Keep in mind, Nvidia is probably going to beat numbers throughout the whole year. So that forward P is probably like 22 or 21 right now. Okay. That's pretty darn low for Nvidia. So it's not like Nvidia is trading at some crazy valuation. Apple has the best numbers we've seen probably since 2021, and they're at a 30 forward P right now, and they're seen as one of the few companies that's not disrupted by AI. So it's not like Apple's like a crazy price right now. Microsoft's forward P is down to like 21. Amazon's down to 25, which for Amazon, if you know anything about Amazing Zone, that's incredibly cheap. Google McDougal's at like a 27, and they're now seen as like arguably the biggest AI winner and beneficiary. And now they're seen as their chip business could be booming over the coming years, along with Gemini and what they're putting together as an AI product offering. So Google at 27, if they're actually going to be the biggest, one of the biggest beneficiaries of AI, is like, maybe that's a little too cheap. For Google McDougal. Meta's at a 20 forward P. Broadcom's at a 32, which they obviously have a rapidly growing business right now, and they're seen as one of the biggest beneficiaries of that. So they're not expensive at 32. Tesla's crazy, obviously. Tesla's 201, but Tesla's Tesla, right? It just is what it is. Berkshire Hathaway's at 22. So It's not like these valuations on these big tech stocks are like expensive now because a lot of the stock price have come down while the earnings have gone up quite a bit. So you can't make an argument. Like you can't look at Microsoft and be like, oh, 21 forward P. Oh, that's insane. Like, have you seen Azure growth? Azure growth is close to 40% if I recall last quarter, right? Like, come on. Like AWS growth is accelerating right now. The e-commerce business looks incredibly strong. So 25 for Amazon's cheap. Meta's at 20. Meta's going to report likely revenue growth of 30+% in this next quarter they're going to about to report. Did you hear what I just said? I just said Meta's likely going to have revenue growth of over 30% when they report this next quarter with a forward P at 20. I know they're spending a fortune and depreciation is going to hit. I've talked about that a million times, and that could be a hang up on Meta over the next few years and why Meta's harder to move up as far as stock price unless people start valuing it in regards to, operating cash flow. But listen, it's hard to, could Microsoft go to a 15 forward P? I mean, it's possible. Could Amazon go to a 17 forward P? It's possible, but it's just like, really? Really? We're going to do that? Like, that's kind of silly, right? So here's what could happen next, in my opinion, okay? Market bottoms in the next 30 trading days, right? SaaS sets the bottom, right? SaaS sets the bottom. IGV starts to move up. This insane, constant selling pressure, it seems like day in and day out of these stocks, finally ends. And you finally get people to say, you know what? I think these stocks at bottom, and they start bidding them up, right? So that sets the bottom. Market sets a bottom in the next 30 trading days, right? And then the market goes beast mode, second quarter into third quarter. Let's say Meta earnings are far better than expected. Revenue growth explodes even more than we thought. Let's say AWS growth is way stronger than we thought. Okay, then people say, okay, we get it. We understand why they're spending so much. Growth rates are going insane for these companies. Boom, right? Market starts getting really excited really quickly. And all of a sudden, the sentiment shifts on these stocks in a second. And it happens quick, guys. It's not like look at how fast sentiment went on these big tech stocks from so positive about like everything's to the moon to so negative. Look at SaaS stocks. I mean, the sentiment around these stocks was so great a year ago, and look at how fast it shifted, and look at how negative it is now at this point in time, right? So if you think it doesn't shift the other way, of course it does. So market all of a sudden goes beast mode, second quarter into third quarter, late Q3 and into Q4, right? We have a new drama show. It's around Bitcoin. It's around elections and everything going on there. It's around, these companies, big tech has better growth than expected, but what's their CapEx going to be for 2027? Maybe they're going to up it way more, right? Fears around that. So we could have a drama show that comes late in the year, but it comes after you already had another major upward rally, right? So it ends up kind of just netting out in the end, right? And so that's where you just got to focus on the long term here. Let the market do what it does in the short term and freak out and, everything's great and everything's bad and all this stuff it does, right? You just got to stay focused on the long term. Buy great companies, continue to add them, more income than expenses, focus on what you can focus on, control what you can control. If Salesforce stock bottoms tomorrow, next week, or next month, you can't control that, right? But if you think that's a great opportunity to invest into over the next, 6 to 9 months, then you can take advantage of that, right? And if you feel like, no, it's not an opportunity, it's a value trap or whatever, then you don't have to invest into it. You can find other opportunities. There's thousands of stocks in the market, right? That's the beautiful thing about this, okay? I appreciate you for joining me as always. Thank you so much for being here. If you're looking to apply, join my private stock group, private wealth group, get access to 1000xstocks.com, my private Discord chat, exclusive weekly videos, all that good stuff. I'm actually going to record my private group a really good educational video here in just a bit. That will be the pinned comment down there. Now, keep in mind, if you have less than $100,000 net worth, you're always welcome to apply. You might not be the best fit for us, but you're always welcome to apply if you have under $100,000 net worth. Okay. Much love and have a great day.